पापा, अपने बिजनेस से जो प्रॉफिट आ रहा है, सोच रहा हूँ उसे शेयर्स खरीदूं।
जिंदगी में जो चीज ऊपर जाती है वो नीचे भी आती है और कभी कभी क्रैश।
तो क्या करूं?
जना करो।
सिर्फ जमा नहीं, जना करो। जना बैंक देता है फिक्स्ड डिपॉजिट्स पे 7.5% इंटरेस्ट, वीडियो केवाईसी से इंस्टेंट अकाउंट ओपनिंग और पर्सनलाइज्ड बैंकिंग जैसे फीचर्स।
बेटा संभाल के।
डैड, सैलरी सेविंग्स अकाउंट में जा तो रही है, मगर पैसा बढ़ ही नहीं रहा।
पड़े रहेगा तो बढ़ेगा कैसे?
तो क्या करूं?
जना करो।
सिर्फ जमा नहीं, जना करो। जना बैंक देता है फिक्स्ड डिपॉजिट्स पे 7.5% इंटरेस्ट, वीडियो केवाईसी से इंस्टेंट अकाउंट ओपनिंग और पर्सनलाइज्ड बैंकिंग जैसे फीचर्स।
अब सिर्फ पढ़े नहीं रहेगा।
और तू?
पापा, अपने बिजनेस से जो प्रॉफिट आ रहा है, सोच रहा हूँ उसे शेयर्स खरीदूं।
जिंदगी में जो चीज ऊपर जाती है वो नीचे भी आती है और कभी कभी क्रैश।
तो क्या करूं?
जना करो।
सिर्फ जमा नहीं, जना करो। जना बैंक देता है फिक्स्ड डिपॉजिट्स पे 7.5% इंटरेस्ट, वीडियो केवाईसी से इंस्टेंट अकाउंट ओपनिंग और पर्सनलाइज्ड बैंकिंग जैसे फीचर्स।
बेटा संभाल के।
डैड, सैलरी सेविंग्स अकाउंट में जा तो रही है, मगर पैसा बढ़ ही नहीं रहा।
पड़े रहेगा तो बढ़ेगा कैसे?
तो क्या करूं?
जना करो।
सिर्फ जमा नहीं, जना करो। जना बैंक देता है फिक्स्ड डिपॉजिट्स पे 7.5% इंटरेस्ट, वीडियो केवाईसी से इंस्टेंट अकाउंट ओपनिंग और पर्सनलाइज्ड बैंकिंग जैसे फीचर्स।
अब सिर्फ पढ़े नहीं रहेगा।
और तू?
पापा, अपने बिजनेस से जो प्रॉफिट आ रहा है, सोच रहा हूँ उसे शेयर्स खरीदूं।
जिंदगी में जो चीज ऊपर जाती है वो नीचे भी आती है और कभी कभी क्रैश।
तो क्या करूं?
जना करो।
सिर्फ जमा नहीं, जना करो। जना बैंक देता है फिक्स्ड डिपॉजिट्स पे 7.5% इंटरेस्ट, वीडियो केवाईसी से इंस्टेंट अकाउंट ओपनिंग और पर्सनलाइज्ड बैंकिंग जैसे फीचर्स।
बेटा संभाल के।
डैड, सैलरी सेविंग्स अकाउंट में जा तो रही है मगर पैसा बढ़ ही नहीं रहा।
पड़े रहेगा तो बढ़ेगा कैसे?
तो क्या करूं?
जना करो।
सिर्फ जमा नहीं जना करो। जना बैंक देता है फिक्स डिपॉजिट्स पे 7.5% इंटरेस्ट, वीडियो केवाईसी से इंस्टेंट अकाउंट ओपनिंग और पर्सनलाइज्ड बैंकिंग जैसे फीचर्स।
अब सिर्फ पढ़े नहीं रहेगा।
और तू?
पापा, अपने बिजनेस से जो प्रॉफिट आ रहा है, सोच रहा हूँ उसे शेयर्स खरीदूं।
जिंदगी में जो चीज ऊपर जाती है वो नीचे भी आती है और कभी कभी क्रैश।
तो क्या करूं?
जना करो।
सिर्फ जमा नहीं जना करो। जना बैंक देता है फिक्स डिपॉजिट्स पे 7.5% इंटरेस्ट, वीडियो केवाईसी से इंस्टेंट अकाउंट ओपनिंग और पर्सनलाइज्ड बैंकिंग जैसे फीचर्स।
बेटा संभाल के।
डैड, सैलरी सेविंग्स अकाउंट में जा तो रही है मगर पैसा बढ़ ही नहीं रहा।
पड़े रहेगा तो बढ़ेगा कैसे?
तो क्या करूं?
जना करो।
सिर्फ जमा नहीं जना करो। जना बैंक देता है फिक्स डिपॉजिट्स पे 7.5% इंटरेस्ट, वीडियो केवाईसी से इंस्टेंट अकाउंट ओपनिंग और पर्सनलाइज्ड बैंकिंग जैसे फीचर्स।
अब सिर्फ पढ़े नहीं रहेगा।
और तू?
पापा, अपने बिजनेस से जो प्रॉफिट आ रहा है, सोच रहा हूँ उसे शेयर्स खरीदूं।
जिंदगी में जो चीज ऊपर जाती है वो नीचे भी आती है और कभी कभी क्रैश।
तो क्या करूं?
जना करो।
सिर्फ जमा नहीं जना करो। जना बैंक देता है फिक्स डिपॉजिट्स पे 7.5% इंटरेस्ट, वीडियो केवाईसी से इंस्टेंट अकाउंट ओपनिंग और पर्सनलाइज्ड बैंकिंग जैसे फीचर्स।
बेटा संभाल के।
डैड, सैलरी सेविंग्स अकाउंट में जा तो रही है मगर पैसा बढ़ ही नहीं रहा।
पड़े रहेगा तो बढ़ेगा कैसे?
तो क्या करूं?
जना करो।
सिर्फ जमा नहीं जना करो। जना बैंक देता है फिक्स डिपॉजिट्स पे 7.5% इंटरेस्ट, वीडियो केवाईसी से इंस्टेंट अकाउंट ओपनिंग और पर्सनलाइज्ड बैंकिंग जैसे फीचर्स।
अब सिर्फ पढ़े नहीं रहेगा।
और तू?
पापा अपने बिजनेस से जो प्रॉफिट आ रहा है सोच रहा हूँ उसे शेयर्स खरीद लूं।
जिंदगी में जो चीज ऊपर जाती है वो नीचे भी आती है और कभी कभी क्रैश।
तो क्या करूं?
जना करो।
सिर्फ जमा नहीं जना करो। जना बैंक देता है फिक्स डिपॉजिट्स पे 7.5% इंटरेस्ट, वीडियो केवाईसी से इंस्टेंट अकाउंट ओपनिंग और पर्सनलाइज्ड बैंकिंग जैसे फीचर्स।
बेटा संभाल के।
डैड, सैलरी सेविंग्स अकाउंट में जा तो रही है मगर पैसा बढ़ ही नहीं रहा।
पड़े रहेगा तो बढ़ेगा कैसे?
तो क्या करूं?
जना करो।
सिर्फ जमा नहीं जना करो। जना बैंक देता है फिक्स डिपॉजिट्स पे 7.5% इंटरेस्ट, वीडियो केवाईसी से इंस्टेंट अकाउंट ओपनिंग और पर्सनलाइज्ड बैंकिंग जैसे फीचर्स।
अब सिर्फ पढ़े नहीं रहेगा।
और तू?
पापा अपने बिजनेस से जो प्रॉफिट आ रहा है सोच रहा हूँ उसे शेयर्स खरीद लूं।
जिंदगी में जो चीज ऊपर जाती है वो नीचे भी आती है और कभी कभी क्रैश।
तो क्या करूं?
जना करो।
सिर्फ जमा नहीं जना करो। जना बैंक देता है फिक्स डिपॉजिट्स पे 7.5% इंटरेस्ट, वीडियो केवाईसी से इंस्टेंट अकाउंट ओपनिंग और पर्सनलाइज्ड बैंकिंग जैसे फीचर्स।
बेटा संभाल के।
डैड, सैलरी सेविंग्स अकाउंट में जा तो रही है मगर पैसा बढ़ ही नहीं रहा।
पड़े रहेगा तो बढ़ेगा कैसे?
तो क्या करूं?
जना करो।
सिर्फ जमा नहीं जना करो। जना बैंक देता है फिक्स डिपॉजिट्स पे 7.5% इंटरेस्ट, वीडियो केवाईसी से इंस्टेंट अकाउंट ओपनिंग और पर्सनलाइज्ड बैंकिंग जैसे फीचर्स।
अब सिर्फ पढ़े नहीं रहेगा।
और तू?
पापा अपने बिजनेस से जो प्रॉफिट आ रहा है सोच रहा हूँ उसे शेयर्स खरीद लूं।
जिंदगी में जो चीज ऊपर जाती है वो नीचे भी आती है और कभी कभी क्रैश।
तो क्या करूं?
जना करो।
सिर्फ जमा नहीं जना करो। जना बैंक देता है फिक्स डिपॉजिट्स पे 7.5% इंटरेस्ट, वीडियो केवाईसी से इंस्टेंट अकाउंट ओपनिंग और पर्सनलाइज्ड बैंकिंग जैसे फीचर्स।
बेटा संभाल के।
डैड, सैलरी सेविंग्स अकाउंट में जा तो रही है मगर पैसा बढ़ ही नहीं रहा।
पड़े रहेगा तो बढ़ेगा कैसे?
तो क्या करूं?
जना करो।
सिर्फ जमा नहीं, जना करो। जना बैंक देता है फिक्स डिपॉजिट्स पे 7.5% इंटरेस्ट, वीडियो केवाईसी से इंस्टेंट अकाउंट ओपनिंग और पर्सनलाइज्ड बैंकिंग जैसे फीचर्स।
अब सिर्फ पढ़े नहीं रहेगा।
और तू?
पापा, अपने बिजनेस से जो प्रॉफिट आ रहा है, सोच रहा हूँ उसे शेयर्स खरीदूं।
जिंदगी में जो चीज ऊपर जाती है वो नीचे भी आती है, और कभी कभी क्रैश।
तो क्या करूं?
जना करो।
सिर्फ जमा नहीं, जना करो। जना बैंक देता है फिक्स डिपॉजिट्स पे 7.5% इंटरेस्ट, वीडियो केवाईसी से इंस्टेंट अकाउंट ओपनिंग और पर्सनलाइज्ड बैंकिंग जैसे फीचर्स।
बेटा संभाल के।
डैड, सैलरी सेविंग्स अकाउंट में जा तो रही है मगर पैसा बढ़ ही नहीं रहा।
पड़े रहेगा तो बढ़ेगा कैसे?
तो क्या करूं?
जना करो।
सिर्फ जमा नहीं, जना करो। जना बैंक देता है फिक्स डिपॉजिट्स पे 7.5% इंटरेस्ट, वीडियो केवाईसी से इंस्टेंट अकाउंट ओपनिंग और पर्सनलाइज्ड बैंकिंग जैसे फीचर्स।
अब सिर्फ पढ़े नहीं रहेगा।
और तू?
Good morning. And I know a few of you have dialed in or logged in a bit early. Apologies to keep you waiting for a few minutes. Good afternoon to everybody in Singapore. And of course, a good morning to all the folks in UK too. Welcome to the webinar on Kickstarting India's Decade on the occasion of Jana Bank's 3rd anniversary. My name is Ajay Kanwal. I'm the MD and CEO of the bank. I've spent 31 years in banking and the last 3.5 years with Jana Bank. Being a very frugal organization, I'm also the MC for the show today. Today is packed with distinguished and authentic speakers for the next 2 hours. We have the privilege and honor to hear from super special individuals like Dr. Subramanian, Rakesh Junjunwala, Sunil Munjal, Hari Bhartiya, Akash Prakash, with Tamal Bandopadhyay as a moderator. But first, to kick off the 3rd year anniversary, I'm sure you folks would expect something to hear about Jana. A wise man once said that don't count the years, make the years count. And in our 3-year journey, we have done exactly that. But I don't intend to spend time sharing financials, balance sheet, capital adequacy, our turnaround story. All of that you can pick up from the web. What I would instead like to do is talk about the bank, its progress, through the lens of the most important thing, its customers, and specific examples which will illuminate the whole thought of kickstarting India's decade. We have secured specific permission from our customers to share their names and relationship with the bank. So now let's look at Jana's journey and Jana's future through the lens of our customers. The first one, BlackBuck. BlackBuck is a logistics aggregator that has developed a marketplace for freight operators and OEMs through a mobile application named BlackBuck. I mean, simply put, it's a Uber of trucks. A few years back when I started the business, of course it had raised enough equity. Was looking for a bank so that somebody could step up and give it working capital limits. We were the first bank to fund this 1-year-old startup. 4 years down the line, they have 14 NBFCs and banks with nearly 20 times the limits that we gave them originally. At the time of funding, they had 25,000 trucks. Now they have about 6 lakh trucks on the supply side. If you look at the BlackBuck and Jana story, it's classic. Essentially, BlackBuck with a solid but a new business idea. They needed a bank which would listen, understand, and take measured risk to help kickstart their business. Just something that we will need when we kickstart our economy. And we are so proud that a successful company like BlackBuck had our partnership in the very early days. I would like to take a second example of another customer. And here you will see how Jana, working with its customers, is developing its business and that of its various strategic alliances to the benefit of its customers. And this is Stell Labs. It's a very interesting picture. And it's not a cowbell that I have mentioned on top. I'll explain what the cowbell is. It's a very interesting instrument, and I thought I must share it with all of you. But first about Stell Labs. Stell Labs is an IoT startup, which is Internet of Things, and offers Smart Move platform. It's a full stack of IoT solution to optimize dairy supply chain spanning milk production, procurement, and cold chain logistics. The device you see on top is called the Move On device. It's a sensor-based device that is put on the cattle to monitor real-time health that directly impacts quality and quantity of milk. It reflects the cattle's health, movement, and temperature, thus helping in preventive health care, lactation cycle, and artificial insemination. I mean, this data then goes to the cloud. It is amalgamated for all the cattle on the farm, and then you really address the issues that the cow may have through nutrients or medicines or whatever else. It essentially improves the productivity in the farm. Now, look at how interesting this is. This company also has a smart, the accumulation centers where they really collect the milk, check the fat content, see what the weight is, through cloud communicate it to the dairies and make sure the chillers are waiting when the milk arrives. So they have a full end-to-end supply chain. We are bankers to them. And they have a total active farmer base of over 5 lakhs with registered farmer base of 26 lakhs. Now, it's not about financing Stell Labs, which is the most important thing for us. What is very important to Stell Labs and to us is we have joined up and we are financing the farmers. Because what they have is, they know which farmer produces how much milk, how the cattle is, and how they've been performing over the years, and how much is their daily collections, what kind of cash flows are coming to them. Based on that, it's very easy for a bank then to extend loans to these farmers. So Stellabs and us not only do have a joint venture in a sense of helping them create these collection centers, but more importantly working with them and the farmers and the dairies to create a perfect ecosystem. The data Stellabs has is something we will never get from a credit bureau. And so that really works very well for us and of course for Stellabs. So Stellabs has data and reach, the bank has a credit model, capital and liquidity, and the two coming together is a perfect answer for the farmer and the dairies. I think the future lies in open architecture, business alliances, so that we clear low risk models like these with competitive barriers to others. Now I've used two fintech examples to start up with how we're doing business. But I really want to now talk of an established brand which has been there for a very long time, and through a strategic collaboration how we will expand our business. The example is of VST Tillers. The name needs no introduction. It's a very strong name in the tractor and tiller business. The tiller you see on the screen now is about 1.8 lakh rupees, used for small acreages, hilly areas, specific soil conditions. Of course, VST tillers and tractors brand over 50 years, strong leadership positions. When we reached out to them, they said, listen, we want you to be a preferred supply chain financer, and they already had a PSU bank and a foreign bank. The reason they wanted us to work with them is because of our rural reach and of course the speed to serve, given that we are a new age digitized bank. But we added a new dimension, and this dimension is saying that really what stops us from expanding our business much more deeper into rural India. It is the lack of familiarity of the geographies, of the communities, of the behaviors of the past. But you know what? The VST tiller dealerships who have been there for a very long time know exactly how the communities are, how the geographies are, how the customer behavior is. If you could work with the dealers to get their local knowledge, complement that with our models, we could really do a big service across India in a much more meaningful way. So we have signed up with VST Tillers. I think a very innovative sign up where now the dealers become one of the parameters of how we decide credit. So a smell test has to go through them. But it's of course great for them too, because we will share the economics and of course they will carry part of the risk. But again, a very interesting way of two organizations coming together and for not just mutual benefit, but making sure that the last mile credit which is required from the dealers is available. And I think that last mile credit information is very crucial. So again, an enduring relationship will endure only if the portfolio remains well. But fundamentally, one of the biggest issues that whether it's SMEs or it's the hinterland, it's about the credit reaching the right person for the right reason. And this is one of the classic answers if you really want to hit the 5 trillion economy. Now that we are still in the rural belt and we have spoken of how the bank collaborates with strategic partners, that is not all actually. I think rural India is really progressing at a very fast pace. I mean, we see that in the bank. I mean, for us, our rural business is very meaningful growth. We are present in nearly 200 districts, which is 1/3 of all the districts in India, and we can see an emerging consumer class each day. Now, what does it really mean? I just want to show you a simple 2 pictures which will describe how rural India is shaping up, and in a pace and a manner which is truly something that one should consider very strongly as we think of our economy as we go along. So first is Chotila. Now I don't have you in front of me, but if I asked you where Chotila is, 99% of the folks won't know. It's a town of about 21,000 people, 70 kilometers from Rajkot, and that lovely row house you see has been built with 7.5 lakhs. We lend to hundreds of such homes every month. And our affordable housing business is today even bigger than it was in pre-COVID. There are hundreds of such small towns and villages like Chotila, which is driving the housing boom. And of course, the demand for cement and bricks and the rest. They're providing employment to informal labor there. And all we need as a bank to address is to have the geographical reach and localization of risk assessment and management. Once we do that, there is a whole housing boom waiting for us, which I think is not even 20% of what it should be. We have been a microfinance institution. We continue to be one. And that's a great business. But what we have seen in the last 3 months is quite amazing. Post-COVID, we have seen that these groups of women whom we give microfinance loans to have started taking in hospitalization insurance. So from a pre-COVID moment where the hospitalization insurance was 0% to a post-COVID moment, it's now at 48%. Now why is this significant, And I think it is significant because you see how the consumer habit has changed so remarkably. How people have realized that spending on healthcare has become a key part, and this is absolute rural India at the bottom end of the pyramid. And it has great social impact on India because if you see the death mortality rate at the bottom end of the pyramid is nearly 3 to 4x at the top end of the pyramid. But frankly, if people start using hospitalization insurance, starting doing preventive care, you will have a drop in the mortality rate. So it's not just about changing consumer habits, it's also how the social status will change, how the demographics will change once this habit changes. But what caught me by surprise, and I thought I should talk about it today when we meet, is how it's possible to change customer preferences and choices. And all you need is education, availability, and affordability. If you have these three, you can really drive customer change and see the rest of India really perk up. To Jana Bank, the opportunities rural has changed to a bigger demand for housing and away from microfinance. Microfinance, of course, continues to be a bread and butter business. It has also now led to us offering deposit and insurance products, which of course is now a rising demand in the rural area. But stepping back for a minute from rural, the underserved is not rural, it's in all segments. One just needs a good economical way to work with different size partners. And that's been possible today with digitization. I must tell you that we are very happy to tell you that we have become banker to a bank. What you see on the picture in front of you is one of the old established cooperative banks since 1973, Ashok Nagar, run by a very solid chairman and management. Obviously, the challenge with small banks is that, and who serve smaller communities, is they really never have the capital, or the capital, when I say capital, I mean capital expenditure, to really drop investments in systems, cyber security, etc., to really put up a good engine for debit cards, ATM cards. So they tend to white label it with big banks. And for us, it was so interesting and so rewarding that we could really become a banker to another bank. And thanks to our partnership now, all the customers of this cooperative bank are enjoying the benefits that you could enjoy with a fully digitized bank like Jana. And for us, it's great advantage because it really helps deflate some of our costs and allows us to keep investing in the future. And it's just like, it's nice that after 40 years, Ashok Nagar Bank met us. And learning from them, we have now expanded this business to be a banker to many banks who need our digitized, solid backend to support their products in the future. I want to finish talking about our customers and how we do business and how we see our customers and growth by using the last example where I think sky is the limit. This is a very interesting example and this is about QR codes. Now, QR codes is a very interesting tool where you can really run your business in a very cost efficient manner, and you can use it in a variety of ways. We have seen so many applications of QR codes. We give our customers virtual account which allows people to pay fees to their schools, etc. But this one really caught my eye, and I think this is something, if you look at and you think of our future ahead, this is a very telling picture. There is this trust in Ratlam, and this trust does noble work. They take care of ill and handicapped cows, and they've been in existence for 117 years. For 117 years, this trust takes care of ill and handicapped cows. They just operate on donations. They have 1,000 cows as we speak in their Gaushala. Now, collecting donations for the trust is not an easy task. So when we met them and we said, listen, a QR code is a simple answer. We create an account for you, create a QR code, and then with help of the trust and the branch managers, we put that QR code in various temples, public spaces, so people could find it easy to really give donation to the Gaushala. You can see the trustees how proud they are holding their QR code. Our ability to change, our ability to adapt, you can't see it better than this picture. And if we are so happy to adapt and change, I cannot but say that our future will be not only strong and solid, but I think it will be very inclusive. On this moment of solid, strong and inclusive growth, I would really like to stop talking about Jana. I think it was a fair idea of our digitization, our thinking, our approach. You folks are most welcome to read our websites on our financials, balance sheet, or get in touch with us. But having said about where we are and where we wish to be, I think it's good time to introduce our star of the morning, Dr. Krishnamurthy Subramanian. Dr. K.V. Subramanian, who's currently the Chief Economic Advisor to the Government of India, is a leading expert on economic policy, banking and corporate governance. He's a PhD from Chicago Booth and a top-ranking IIT IIM alumnus. He has authored the path-breaking economic survey that commends ethical wealth creation for a prosperous India. By integrating India's rich economic and spiritual heritage with modern economic ideas, he advocates ethical wealth creation through a marriage of the invisible hand of the market with the hand of trust. Very interesting. His 2019 economic survey, again authored by, of course, him, laid out the strategic blueprint for India to become the 5 trillion economy. Dr. Subramanian has been conferred the Distinguished Alumnus Award by his alma mater, IIT Kanpur. And of course, apart from being the youngest Chief Economic Advisor of India, he is also the youngest to receive this honor from his alma mater. With that, I would invite Dr. Subramanian.
A very good morning to everyone. Thanks a lot, Ajay. Those were really inspiring stories to hear about Jana Small Finance Bank. As a 3-year-old, I would pray and wish the bank that Shatamanam Bhavati Shatayuh Purusha Satendriya Ayushevendriya Pratidishtati. Blessings that you may become 100-year-old and with a lot of Aishwarya, a lot of pride in what you do. And we hope that the 3-year-old indeed rises to exalted heights in the next many decades. I want to, along similar lines to the way Ajay talked about, I want to focus on the changes in economic thinking that are happening in the Indian context, and want to focus on the big picture in terms of what is the vision that is driving the economic model for development in India. Think about the vision for economic development in India as a tripod that's comprised of three legs, or if you will, a triangle that has three vertices. The first leg is exclusive focus on economic growth together with efficient welfare. So growth, economic growth and efficient welfare, that's the first leg. The second leg is ethical wealth creation. And the third one is one that actually implements the model for growth through a virtuous cycle starting from private investment. Let me try and put more flesh into each of these three pillars or the three legs of the tripod for economic development in India. Let's start off with the first, which is the combination of economic growth together with efficient welfare. If you look at over the last 6.5 to 7 years, India has demonstrated very well that welfare programs can be implemented very efficiently. This year's economic survey, if you look at the last chapter on the bare necessities index, an index that is constructed using the NSSO's survey data, not administrative data from the government. You can see that there's been secular improvement in the access to bare necessities. When you compare, 2012, the level at which they were vis-a-vis 2018, and quite importantly, quite saliently, the improvement has been far greater among the bottom 20th percentile in terms of the, in terms of the income or the wealth of the household compared to the rich households. In other words, the poorest households in the country, poorest 20% households, have enjoyed far greater improvements in access to bare necessities of drinking water, sanitation, a good environment, compared to 2012. So in that 6-year period, there's been a significant improvement. And one can also see the Swachh Bharat campaign, the PM Awas Yojana, the opportunities that Ajay spoke about. But I think India has now demonstrated the potential for efficient welfare programs to be able to bring a meaningful impact in the lives of the last common denominator. As Gandhiji used to say, the talisman. Think about the Daridra Narayan, the word that he used to use, and is it making an impact to that person's life? And I think efficient welfare is indeed showing the impact on that. But in order to do welfare, you need resources, and I think that's where the focus on growth becomes extremely critical. This is, I cannot emphasize this enough, because policy making, be it at the corporate level or the country level, requires clarity of objectives. And I think this clarity, which is focus on growth, and that generates the resources for efficient welfare, but an exclusive focus on growth is really important, because at the macroeconomic level there are always trade-offs. So trade-off between, for instance, growth versus inequality, growth versus debt sustainability, growth versus inflation, etc., that one can really focus on. But I think in particular the growth versus inequality debate is particularly relevant to focus on. I think if you some of you, those who may have actually seen this year's economic survey chapter on looking at this particular tension, I think what we have to be careful is to not to just cut paste what prevails in advanced economies onto India. We have to think ab initio, from first principles, what is right for us given the stage of development that we are in. And that's what this chapter in the economic survey shows, that India must focus on growth, because there is no conflict between growth and inequality in the Indian context if you look at it carefully using empirical evidence. And so I think the focus on growth is extremely important. So that's the first leg. And I think no better way of illustrating the importance of growth versus inequality than just look at this year. There are some commentators who, for instance, are saying that the rich have not been as affected by the, by the pandemic, or the impact on growth due to the pandemic as the poor have been. I think that exemplifies the importance of growth, for large sections of the economy, especially those that are less privileged than some of us. The second important leg here is ethical wealth creation. And here as well, I think, it is important to look at what India has had in terms of its economic model, economic development, and really recognize our strengths. Last year's economic survey, we had pointed out, using research by very painstaking research done by Angus Madison, who documented the contribution to world's GDP from 180 till 2080. And one of the key, evidences that comes out, and actually it's an aha moment, it was an aha moment for me, is that up until 1750 AD, that's 17 and a half centuries, India accounted for at least 33% of world's GDP, at least 33% of world's GDP. In some centuries, it was as high as, 40, exceeding 40%, 40 to 43% as well. For 17 and a half centuries, accounted for at least 33% of world's GDP. Just to understand the extent of dominance that, that this means, take the country that we all know today as the economic superpower, the United States. At its peak, at its maximum, the United States has accounted for about 16 to 17% of world's GDP. In other words, maximum of 16 to 17% compared to a minimum of 33%. And what about the duration? The United States has been a superpower, economic superpower, for half a century. Compare that with the 17 and a half centuries. Put these facts together and marvel at the economic dominance, and something that we all have to remember. 17 and a half centuries versus half a century, at least 33% versus at a max 16-17%. That tells you of the economic dominance. So people that might have lived 300 years back would actually have looked at India in far more awe than what some of us today may be looking at in the United States, given these facts. And by the way, this is not opinion; these are facts. Now, such kind of dominance does not come about just through sheer luck. It comes because of the quality of the economic thinking, the quality of the economic model that actually leads to such sustained growth that then creates the dominance. And that is what, if you go and read the native literature, whether it's Arthashastra in Sanskrit or Tirukkural in Tamil, my native language, written by Saint Thiruvalluvar about 3,500 years back, you go and read there, you actually find that the idea of ethical wealth creation by marrying the invisible hand of the market with the hand of ethics has been advocated. Never talked about just wealth creation, about ethical wealth creation. In some sense, we can relate this to our daily lives. You will find many of us, in our homes, the two words written, Shubh Labh. And that captures it so well, because it does not say Shubh and Hani, which is Shubh, doing good and for losses, or nor does it say Ashubh and Labh, which is unethical wealth creation or wealth creation through any means. I think this is important to recognize, because this is what has been part of our DNA. The 40-50 years of the tryst with socialism that we undertook, that never delivered the promised tryst with destiny, is but ephemeral. And I think we have to return back to that DNA of ethical wealth creation. The hand of ethics itself being derived from our morals, spiritual and philosophical foundation. That's what basically advocated the hand of ethics. The third important aspect, important leg, the third leg of the tripod, is this virtuous cycle starting from private investment. This is illustrated in the, has been described in the 2018-19 economic survey. When we set out to identify the right strategy for India to become a $5 trillion economy, the first thing we did is we looked at all the countries over the last 1 century that grew at least 5% in real terms, 5% growth, but not just for a few years, at least a decade. In other words, at least a decade of 5% plus real growth. And when we looked at each of these countries, the first thing we recognized is that at the macroeconomic level, every variable is both a cause and an effect. For instance, investment is the cause of productivity improvements, which can then lead to growth. But investment is also the effect of anticipated increases in consumption. So investment is both a cause and an effect. Consumption is the effect of growth, more money coming in the hands of people, but consumption is also the cause of investment. Jobs are similarly the effect of economic growth, and they're also the cause of improvements in consumption through increases in disposable income. So at the macroeconomic level, every variable is both a cause and an effect. And therefore, in order to identify a strategy that can indeed deliver sustained growth, it's important to, in a scholarly way, go and really disentangle and find out what is the originator of this particular, of the virtuous cycle. And turns out across each of these countries that had 5% plus growth for at least a decade, that virtuous cycle starts from private investment. This is the the key idea that is important for growth. It's not consumption comes as an outcome, but it's private investment that leads to productivity improvements and greater jobs overall in the economy, which then puts money in the hands of people, enhances consumption and aggregate demand. Anticipating that increase in aggregate demand, investment increases further. That's how this virtuous cycle proceeds, and that is very important for sustained growth. And therefore strengthening the two legs that I spoke about, in this context. And here, I think the role of the private sector, both in the context of wealth creation and in the virtuous cycle, because it's private investment that we're talking about, is very important. Public investment, is a trigger and a facilitator of that private investment, much as reforms on the supply side and demand side are important, because in a country like India, the frictions on the supply side are much higher, and reforms therefore to remove those frictions, be it labor reforms, be it MSME definitional changes that actually did not, before that, the phenomenon of dwarfism that remained, as a result of which firms did not grow enough and thereby did not create jobs, be it that, be it the production linked incentives that incentivizes consistent growth of enterprises, in the to be able to compete better, reap economies of scale and thereby be competitive in the global markets. Whether it's the opening up of the entire cryptography sector, the defense sector, the privatization, thereby transferring assets to where they can be more productively employed, or asset monetization, thereby releasing assets that are idle for productive use. These are all extremely important, in this tripod of growth plus efficient welfare, ethical wealth creation focused on enabling the private sector, empowering the private sector, and the virtuous cycle that starts from private investment. These are extremely important and that's what, if you look at over the last, 1.5, 2 years, with the crescendo of the policy making being if the union budget of this year has really tried to accomplish, by basically implementing the ideas in this vision for economic development. Let me stop there. I'd be very happy to take questions going forward. Thank you very much.
Thank you, Dr. Subramanian. I must say that for 17 and a half centuries, we ran 33% of the world GDP. Is quite a revelation. If you can get back there, it'll be really awesome. And of course, Shubh Labh, well defined. Thank you so much. And we will just invite Tamal. Tamal is a veteran journalist. He's an author, and he writes the most popular column on banking called Bankers Trust. His latest book, Pandemonium, The Great Indian Banking Tragedy, is creating weight. Not too many understand banking as well he does. And it's great to have Tamal ask all the insightful and the meaningful questions, both from his perspective and what has come from nearly over 50 questions from the audience for the CA. So with that, I welcome Tamal. Tamal, please.
Thanks, Ajay. You rightly said I'm a sort of aggregator. There are many questions came in the question box. And not too many of them are exactly very, could be pleasant and music to your ears, Dr. Subramanian. Let me warn you in the beginning. But these are the questions from India and overseas who are curious about India and watching India growth story. So let me first ask you what you also mentioned, that the PLI, the Production Link Incentive Program. And I think you want to create champions, you want to grow scale. There are 13 sectors, and we are already seeing what's happening in the mobile telephone manufacturing segment. So is it something the biggest that you are betting on, the government?
So thanks a lot, Tamilda. Firstly, you're right. If you look at the PLI scheme, idea there is not only to win a at the sectoral level, but also to incentivize growth. And let me contrast with, for instance, the earlier scheme that you detailed, the NEI, which had no incentives for growth. Um, Now, one of the key things that we all have to remember as policymakers is that the fiduciary duty of the policymaker to ensure that taxpayer money, which is a scarce resource, put to the best use. Um, and there's when a rupee of taxpayer money is spent on something, there is an opportunity cost to that because it could be spent elsewhere, maybe in healthcare, maybe in education, maybe in banking, or maybe in fostering exports. And therefore, I think it is extremely critical that when that taxpayer money is spent, it actually provides the right incentives. And that is what the PLI scheme involves. One, sectoral level, focusing on sectors where the potential for growth is significant, because if you look at the Indian exports configuration over the last 20 odd years, 25 years, we've not been as much in the sunrise sectors. And I think it is extremely important to be there in those sunrise sectors, because the share of the pie that you can get is far higher. That's one idea. But second, among them as well, focus on companies that can consistently grow and thereby not only help themselves but also the country through the export penetration.
That's what my question you have actually led to. It sounds like a bit of puzzle. On the one hand, we want exports to grow, and on the other hand, we are increasing the tariff on imports. I mean, it sounds like a puzzle. Can you explain briefly on that?
I'm glad you asked that, Tamildar, because this is a question that I think comes up with, in a lot of people's minds. Here, what is important is to look at the or understand this with the nuance that is required. If you look at trade itself, and I want to first comment on the overall economic commentary on trade, and then come to the specifics and the nuances. So someone like Paul Krugman, who was a very, very passionate votary of free trade, in recent years has acknowledged that trade is not necessarily win-win. It does create losers as well. And in a democracy, we have to be we have to pay as much attention to the needs of potential losers from free trade as the winners. And I think that nuance is something that it has been there in the policy making, but economic thinking has to reflect that as well. That's point number one. But more importantly, the second point is, when we talk about tariffs, I think it is important to make a distinction between tariffs on finished goods versus tariffs on raw materials and intermediates. And that's where I'm really going to relate it to your question. When we think about enabling exports, if we increase tariffs on raw materials and on intermediates, then that certainly is something which will actually inhibit the export, the focus on exports, on enhancing exports. But at the same time, I think, on finished goods is that it's a different story, because That is where you do not want a 5-year-old, a 10-year-old to be asked to go and actually, have let's say a kushti match with a 25-year-old. That's not necessarily fair competition. I do recognize at that time that we should not be pretending that the 5 or 10-year-old continues to always be a 5 or 10-year-old even 10 years later. We have to understand that that 5 or 10-year-old becomes a 15 or a 20-year-old, 10 years from now. But with that understanding and with that commitment, we do have to recognize that we can't let basically a 25-year-old compete with a 5-year-old. I think these nuances are very important. So I don't see any internal inconsistency in the focus on exports through the PLI scheme, and at the same time, this nuanced thinking about trade itself, about tariffs. And finally, let me mention this. WTO. If you look at the data, and one of the things that I like always focusing on, rather than expressing opinion, it's better to speak using data. If you look at the charts that recently WTO has put out, the average tariff in India has declined over the last 6-7 years. I think that is basically a fact that we have to acknowledge as well.
Thanks for the clarity. Now, you spoke about privatization. If I'm a global investor, I have been seeing India talking about privatization like IDBI Bank being taken over by LIC. It's a mockery of privatization. Can you tell me, how do you convince me that this time you are talking about real privatization?
So I think that's a very good question. It's a very apt question. So firstly, I think we must acknowledge, Tamulda, that in government documentation, the word privatization is being used for the first time. If you look at the in previous occasions, even when the during the Vajpayee government's time, when a lot of privatization was done, the word that was used was disinvestment, not the word privatization. And if you would recall, the word privatization was used for the first time in the last year's economic survey. We had written a chapter called Privatization and Wealth Creation, and henceforth this year's budget has used that word privatization. So, and this is not just semantics, even on the semantics itself, the use of the word, apologetic word disinvestment versus the unabashed use of privatization is the first change that you have to recognize. Secondly, I think it is, it's important to keep in mind that if you look at the targets for this year, right, 1.75 trillion or 1.75 lakh crores that has been budgeted. This is actually a carryover from the estimates that were there last year. Last year 2.1, of which the BPCL privatization, the LIC listing itself actually were important contributors. So BPCL itself estimates, there are estimates suggesting that about 75 to 80,000 crores, or maybe even higher, can come in just from the privatization of BPCL. The LIC IPO can bring in about 1 lakh crore approximately, for instance. So these are numbers that are eminently achievable. Why? Because work had begun on many of these last year itself, and they will be completed this year. That's the second important point to keep in mind here. And finally, if you look at the speeches given by the Honorable Prime Minister, both in his thanks, address to the President's address on the floor of Parliament, where he talked about private sector, respecting private sector, about the role of privatization. He's talked about this even in some of the implementation committees on privatization and asset monetization. I would mention that the Hindu Business Line, the day after the PM made this speech, had carried in its editorial saying watershed moment. Why? Because for the first time, the Prime Minister has actually, the Honorable Prime Minister has talked about privatization, about the role of private sector, and the fact that they bring efficiency, and that we should talk about them, we should respect them, not talk about them actually in negative overtones. I think these are all signature changes that are happening, and therefore this is not just a sporadic thing. As I already have mentioned, the change in economic thinking is actually has these three legs, of which private sector is a very critical counterpart, a part of that. And therefore I'm very, very confident that we will walk the talk.
Investors are listening, so it's not a lip service. You will walk the talk, and there's a dramatic change. The government is talking about wealth creation. Prime Minister said that government has no business to be in the business. But tell us, who's behind this change? Is it your three economic surveys? For
Well,
that?
Kamalda, I
Yeah.
think I have always maintained that economists like us can only offer advice. After offering advice, we can try and persuade. We can work hard on that. But I think the ultimate decision is taken by the decision makers. They are the ones that have to also take into account all the whatever pushback that comes to them, and quite rightly, therefore all the credit has to go to them. I think decision making, especially in a democratic polity, is something that is not that easy. I've had the opportunity to see it from from very close proximity, and therefore the credit has to go to the policy maker, to the decision makers who actually taken these decisions. I must say I'm very glad to actually see some of these ideas being implemented, but the credit has to completely go to these decision makers.
That's fair. That's fair. I don't think you can take credit, but you yourself can't. But we give you the credit for the change in the mindset. Quickly, because we are half the time we have spent, and I have few more questions, and they're all critical ones. People want to know. Tell me what's your take on the long-term growth story? You have been talking about 8%, but people are not convinced. They said 5%. That's good enough.
So let me, I'm going to give a little bit of a long answer to this, Tamalda, because I need to get into some details here.
I have many more questions, so chota.
Yeah, but I think this is possibly the most important question. So, see, if you look at the budget, and let me use the framework of, if you take growth rate, right? Growth rate, macroeconomists think about that as the gross fixed capital formation in the country multiplied by the ICOR, the incremental capital output ratio. And if you look at the steps that have been taken, they impact both of them, which is the gross fixed capital formation in the country and the incremental capital output ratio, which is just a measure for productivity. I think we've spoken about many of this. The economic survey, the second chapter this year, talked about how public, capital expenditure crowds in private investment. And if you look at the, and recent data, for instance, if you look at the CEIC estimates on investment sentiment, or the RBI's business expectation survey, we are at, some of these numbers are suggesting we are at a 20-year peak in terms, or high in terms of the investment sentiment. And recall what I spoke about on the virtuous cycle, that the start of an uptick in the business cycle always gets originated from private investment. So I think gross fixed capital formation in the economy will go up, certainly, and can in a few years start getting close to the 40%, 38, 39% that we had earlier, because of the focus on infrastructure, because of the focus on capex, and the enablers that have been done through the DFI, the Development Financial Institution, both in the public sector and the private sector, and the financial sector reforms, because capital is extremely important for capital formation in the economy. Similarly, if you look at on the productivity side, we've already spoken about privatization, about asset monetization. What asset monetization does is, idle assets, those that are not getting used in the economy, are brought into use in the economy. So they will improve the productivity, and thereby actually also, lower the ICOR. So when you think about actually the growth rate is because of improvements, or improvements in productivity and improvements in the gross fixed capital formation in the country. I am I'm quite optimistic that going forward from FY23 onwards, FY23 likely will be at 6.5%, but we will be hitting the upward trend and going towards 7.5%, 8%. Because even on the productivity side, the measures that are being taken on healthcare, and on many of the other economies of scale, some of the reforms that we spoke about, labor reforms, the change in MSME definitions, all these will come together and push both your gross fixed capital formation and the and the productivity in the economy. So I am quite optimistic. I think that the 5% is something that we should easily be able to hit over the next decade, quite likely 7% plus.
Okay, so people are listening to you, not 5%, 7% plus. Say 2022 fiscal year definitely will have a growth because of the low base effect. But tell me, people have been talking about after that. There are people like, and this is very contradictory what I am going to say. Ajay would not like this because this is this afternoon you are talking about India's decade. But I am asking you a blunt question. Do you have any, I mean, there are people are talking about it could be a decade of stagflation, low growth and high inflation. Is there any merit in this kind of thinking, or they are the naysayers?
I think, Tamilda, I've already outlined the economic rationale that makes me say what I'm saying. As I've emphasized repeatedly, I give my assessments based on data using economic frameworks, and I think it's quite likely. I don't think any of us is an astrologer that can predict for sure. But when you make assessments using conceptual frameworks, think ab initio and bring data to actually to throw light on important questions like these, it's much more likely that what we are predicting will manifest, compared to just sort of an opinion which is not well grounded in economic theory or with data. So as I've already explained to you, I don't foresee this possibility of stagflation. Once again, let me mention FY22, of course, because of the base effect, the growth should be in double digits. FY23, I think it could be 6.5%, because some of the impact of the reforms will still be manifesting, would not have fully manifested by FY23. But beyond that, I think a lot of these long run measures that we have taken will start bearing fruit, and therefore it's quite likely that the gross fixed capital formation will go up and your productivity will also go up in the economy. So it's important to understand it's finally capital formation times productivity that basically leads to growth. So I actually am convinced, because of the thinking that is leading to this prediction. I'm sure on macroeconomics people will always have a lot of intelligent people may disagree, but I would like to stick to my assessment based on the rationale that I gave you.
You don't apprehend any kind of fiscal crisis for us?
So I'm glad you asked this. So in the second chapter in the economic survey, we dealt at length. That's a chapter that had about 16,000 words. I'm just bringing it up because typically, and just sharing a secret, I would keep 10,000 words as a benchmark for chapters in the survey. But this one I felt actually so important. We need to actually bring in all the analysis. And the basic idea there is, let me explain it in the following way. Suppose I borrow 100 rupees from Jana Bank, and I pay, let's say, an 8% rate of interest. I invested in a venture that gives me 12%, as the return, let's say. So and just for simplicity, let's say this is a 1-year loan. At the end of the year, I have to repay to Jana 108 rupees because I've borrowed at 8%. But because I've made 112 rupees, I can pocket 4 rupees, I can borrow another 100 rupees, and I can continue this as long as the return that I'm making is actually greater than the interest that I'm paying for the borrowing that I'm doing. Now, take this simple example and translate it into the macro scenario. What you're talking about is the difference between the nominal rate of growth and the nominal rate of borrowing, what is called the R minus G. So R is your nominal rate of interest, G is your nominal rate of growth. You can do it either in nominal terms or in real terms, as long as you're comparing apples and apples, not apples and oranges. In India, if you look historically, and we've shown this data, the R minus G differential has been about minus 4.2%. In other words, nominal growth rate has been about 4%, at least greater than the rate of interest. And what we have done is we've actually projected this in the and those who are worried about debt sustainability should definitely go and take a look at this, because it's important to understand the difference between flows and stocks. Fiscal deficit, primary deficit, those are flow variables. your debt to GDP is a stock variable, and the R minus G differential eventually impacts basically your stock, which is debt to GDP. And why do you care about the debt to GDP? Because how much of your GDP do you need to actually repay your debt? That's what basically the debt to GDP captures. And the key point I'm making here is that as long as the nominal rate of growth is higher than the nominal rate of interest or the borrowing, and by the way, interest costs are completely incorporated into this identity. It's a mathematical identity, it's a tautology, and that the derivation for that is also provided in a box in the economic survey. When you take into account endogenously the interest cost and then find that the growth rate is greater than the rate of interest, debt will come down. And what we've shown there is even with 3.8% real growth, 3.8% every year starting from now on up until FY30. Mark the scenario that I'm pointing out. Every year starting from now, from FY20, 23 onwards till FY30, 3.8% real growth only. Even if we have that, debt will remain sustainable. Now, from there, you can project actually all other scenarios are only better than.
I have been able to provoke you, so thanks for that. Quickly, we're running out of time. I have a few more questions, 2 or 3, and the 2-3 critical things that that one can expect from the government in the next 16-18 months. Quickly, we are just one-line answers. Just want.
I think implementation is what is the most important. Right now, the focus is on implementing the several ideas that have been brought out. I think that has to be the #1 priority at this point in time. The privatization agenda, the asset monetization agenda, the infrastructure pipeline, these have to be the most, the banking sector, all the reforms, your bad bank, your privatization of the 2 public sector banks, the insurance, and traction has already begun on that. Even the DFI. So the implementation of these has to be the most important at this point in time, because we have actually announced a very ambitious agenda, and I think implementing that is by far the most critical.
I'm sure everybody would agree with you. Quickly, I can't let you go before this. This inflation targeting, it's 5-year is over, next 5-year, and it's more or less certain that we will stick to 4% inflation, flexible inflation target by RBI with a plus minus 2 percentage point band. But globally things are changing. US are talking about average inflation. Past decade was -2. Now it's talking about +2. Do you think we are sort of obsessed with this inflation targeting? Because anyway, our retail inflation 50% weightage is from food, and every time onion prices, tomato prices go up, RBI goes to the drawing board. So, is there anything needs to be changed? You think quickly?
So quickly, 2 points, Tamalda. One, if you look at the evidence, I think not only do we need to look at inflation levels, but in volatility of inflation. I think overall, inflation targeting has helped in bringing the volatility of inflation and level of inflation down. But what is important to keep in mind is that when there are supply side factors that that cause inflation, and a lot of it is coming from the food economy, that is something that we have to be a little careful about, because monetary policy can primarily influence demand, and so I think it ideally should not be responding as much to the supply side factors.
Okay, that's a message. I'm not a message. That's a statement I'm sure RBI is listening to or would listen to. And finally, I can't let you go before this question, is because it's a banking summit. I mean, rather an event organized by a bank, small finance bank. Tell me your one-line answer. Indian economy, does it need more banks or lesser number of banks?
Lot more banks. Lot more banks. Just I'll give you a quick comparison. The United States, which has 1/3 the population of India, has about 25,000 banks, 25,000 to 30,000 banks. Do the per capita comparison. You will get, again, based on evidence, why I'm convinced that we need to have a lot more banks.
Thank you. Thanks. I mean, I don't want to summarize and take more time, but the last thing is, which Ajay should take a note, India needs a lot more banks, so a lot more competition for him. Yeah. Thanks. It's over to you, Ajay.
Thank you very much.
And thank you.
This represents the clapping of thousands of folks watching you and listening to you. It would have been thunderous if they would have been here. So, and I must tell you just 2 things. I definitely believe the animal spirits have been released. Whether they're walking or running, I don't know, but 7% is a reality. And I love this when you said, what do you expect next from the government? And you said, implementation, implementation, implementation. So thank you so much. It's really been an honor and a pleasure to hear from you. And I'm sure folks who are in business listening to you would have been running to their CFOs and saying, let's invest. Thanks so much, Dr. Subramanian. And of course, Mr. Tamal Bandyopadhyay, you have been absolutely, as we expect, as insightful and as painful as it could have been. So thank you so much.
Thank you.
Thank you again.
Thank you very much, Tamalda. Thanks, Ajay.
Thank you.
Thank you.
Stay safe.
And having set up the stage brilliantly, I must say that I have been taking a lot of notes and just we overran on time, so I wouldn't summarize. Probably I do it at the end. I think it's very important we now go to our next very important session, which is the new decade will belong to India. It's led by two very distinguished, very successful, and very authentic people, Sunil Munjal and Mr. Hari Bhartiya. First, I will give you a brief introduction of Mr. Sunil Kant Munjal. Mr. Sunil Kant Munjal, all of you would know, but it's my duty to read out as a host at least a few things about him. He's been one of the founder promoters of the Hero Group, India's premier auto manufacturing group that has evolved from being the world's largest bicycle maker to the world's largest two-wheeler maker. He's the chairman of the Hero Enterprise with interest in insurance distribution, steel making, real estate, and corporate training. He chairs the board that runs the Doon School and sits on the boards of IIM Ahmedabad, ISP, and SRCC. He has co-founded BML Munjal University, which is popularly known as BMU, and is a president of the Dayanand Medical College and Hospital in Ludhiana. He has also chronicled the incredible saga of the Hero's founders in a book, The Making of Hero, which featured among the India's most prominent bestsellers for several months, and recently won the Business Book of the Year award at the Tata Literature Live Festival 2020. Accompanying him is Hari S. Bhartiya, the founder and co-chairman of the Jubilant Bhartiya Group. Hari, together with his brother Sham, is a founder and co-chairman of the Jubilant Bhartiya Group, headquartered in New Delhi, India. The Jubilant Bhartiya Group has a strong presence in diverse sectors like pharmaceuticals, contract research and development services, proprietary novel drugs, life science ingredients, agri-products, performance polymers, food services, food auto consulting in aerospace and oil field services, and currently they have a global workforce of 42,000. Of course, we know them very well through their franchise of Domino's Pizza, the world's largest food service chain, and Dunkin' Donuts in India. Hari himself is a chemical engineering graduate from IIT and has been conferred the Distinguished Alumni Award by his alma mater in 2000. He is currently the member of the International Advisory Board of McGill University, Canada, Chairman of Board of Governors of IIM Visakhapatnam, and Chairman of CII, the Jubilant Food and Agriculture Center of Excellence. His immense contributions have been recognized by various awards. Along with his brother, they've been felicitated with the Entrepreneur of the Year Award at the prestigious AIMA Managing Awards. And with that, I would like to welcome both Mr. Sunil Muljan and Mr. Hari Bhartiya.
Thank you. Thank you, Ajay, and congratulations and good wishes to you and to the entire team at Jana Small Finance Bank for completing 3 successful years and setting the bank up for a growth trajectory in the future. Hari, let me come to you. Ajay mentioned an interesting topic about India's growth and 10 years as we look forward. Actually, if you look back a little bit in history, over the last century or so, India has continued to disappoint both the pessimist, and the optimist. We continue to hope for India to break out of the low growth trajectory it had, which, by the way, it has done in the last some years now, and constantly hope for a greater global connect, more focus on innovation, and a whole host of other initiatives. If I look at how the world has evolved, many times we continue to focus on cost as an advantage, but we do know that's never an advantage for the long term. When the economy started to develop, the more contemporary industrial and economy started to develop, the big advantage went to Europe first. And then it moved from there. It moved to the US for a while, moved away to Japan, then to what they call the Asian tigers, then on to China. And we always used to keep saying India was great in its distant past. And by the way, it was, because at the end of the Mughal period, we had 21% world trade, single nation, and or in its potential. Now, what do you think is going on right now in India, and what makes you believe that it is truly India's decade? And I see Rakesh Jhunjhunwala has just joined. He said yesterday it's not only India's decade, it's India's century that we are going to see now starting off. All the ingredients seem to be in place. We seem to be setting many of the building blocks in there. What do you think is the magic sauce which will make this work?
Thank you, Sunil. And firstly, my congratulations to Ajay and the entire team. This was a nice morning session, which I attended also. Talking about India's decade, you know, I'm an entrepreneur. I was part of a business family, so early stage we learned how to take risk. And I must talk a little bit about these 40 years of experience in terms of how India has changed. You know, when we started doing business, it was more about license Raj. And so the opportunities were limited and limited to people who could understand the whole system and raise capital and build businesses. There has been a sea change in the 40 years. Today, the ecosystem exists for entrepreneurs. And I'm saying the next decade is for our entrepreneurs. There's a groundswell, and I want to explain what I mean by that. And I must explain what is this ecosystem which drives entrepreneurship. And of course, entrepreneurship drives livelihood. And so this is not only going to create wealth for entrepreneurs, but create livelihoods for a large number of people who are coming in from the so-called agricultural sector where they are employed into the new economy. First thing that has changed is technology and digital. Today, a small entrepreneur has access to market and access to customers directly. It doesn't have to be a large company. So that is a very powerful tool. Today, we have individuals as entrepreneurs. I'm sure you have heard about influencers. And there are now 1 million influencers in India who are themselves as entrepreneurs who are creating brands. And what has digital done? It has created a new set of customers in every part of India who are prepared to experiment with new products, with new brands, because today they are able to understand, go deeper, understand about the brand, the core of it. So they are able to try new things. It's not about just being an established brand. So that is a huge opening up for possibilities for entrepreneurs. It's not that India didn't have entrepreneurs 40 years back. I think we were always an entrepreneurial economy, but they were constrained. and that's what is changing today. There are venture capitalists from very small to very large, prepared to take risk. Failure is no more a bad word. You know, I work a lot in US, and I've always been impressed about one thing, that if an entrepreneur has failed twice, he's considered in US an experienced guy. In the third time, people are ready to bet. In India, failure was always treated very badly. If you have failed in something, that means I'm not going to bet on you. That has changed.
You
People have
raise,
understood
yep.
that failure is part of entrepreneurship. Thirdly, the ecosystem of innovation through academic work, venture capitalists, vendors. In these clusters, you can start a business by partnering with this whole ecosystem. And that is what is changing India very fast. And these clusters are starting to form in different sectors, whether it is agri, whether it is pharma, whether it is food processing, whether it is textile, automobile, which Sunil, which you know very well. So looking at the bank, and I saw Ajay's presentation, he talked about Stell apps and he talked about Black Buck. Look at the banks, how smart they are, how they understand technology and entrepreneurship and are ready to support them. That kind of ecosystem did not exist earlier. So the next decade,
You make some. Let me come in here, Hari, for a minute. You make some very interesting points about entrepreneurship, especially about new entrepreneurs. And by new, very often we also mean only young entrepreneurs. But that's not strictly speaking correct. There are many people now who are at the age of 40 or 50 or even older who have said, I'm going to start something new. People who have been working in companies, professionals, are giving up their jobs. I know for a fact, if you look at the interesting industry of wine in India, many of the vineyards have been set up by senior professionals who have given up their jobs and gone and set them up. And so is the case, of course, with a whole host of other areas. What do you think, other than you made a very fundamental point, accepting, in fact, celebrating failure has been one of our failures that we did not recognize this earlier. We've only now started to accept failure. You spoke of US, California as a hotbed of innovation, and there failure is actually celebrated. So what are the other ingredients that you think are required if there are policy intervention or otherwise, if there are financial system shortcomings or where banks can come in? What are the 2 or 3 things you think which will help this amazing entrepreneurial energy to truly catch the spark and get India back to where we would all like to see India?
see, I think one of the strongest ingredient is risk capital. You know, Sunil, I know you invest. Rakesh is here. All of you guys take risk on many ventures. So from in the villages where women form groups to large enterprise, somebody needs to take some risk. I think that's where more and more risk capital. The large banks were becoming risk averse. Now, a small entrepreneur, whatever age that could be, and I fully agree, age is no criteria for starting entrepreneurship. People start enterprise at the age of 60 and they are successful, and because they carry a lot of experience. So it's not about age. I believe, and I'm talking because we are talking on a platform of Jana Small Finance Bank, and my request to has been always to the banks is, how do you train your people to take risk? Because when you are starting an enterprise, bank is your partner. Bank is not, I remember my father when starting the business, they had to सब कुछ गिरवी रखना पड़ता था, There you have to put your house, you have to put probably your wife's jewelry, everything as a mortgage. But today's entrepreneur comes with nothing. He has no capital, he has no asset, he has only ideas. He's putting ideas to mortgage. Yes, you can mortgage that, you can mortgage the companies. So I think the new learning, and it's starting to happen. We have a venture capital ecosystem. But I think banks, especially small banks, and I know Jana is taking a lot of risk, and this must change. The ability to take risk. And I'm sure there are many institutions which will come up from small startup people who support the initial stage of capital to venture capitalists to private equity, and then of course large banks which support infrastructure and other things. So I would say one ingredient which is required is risk capital.
So let me just shift a little bit, since the theme of the day is on the next 10 years being India's decade, is other than entrepreneurship, because we are now well, the growth trajectory, except the hard knock that the whole world took last year, clearly India has gone back into a growth trajectory. In fact, it is expected that we will go back to being the fastest growing large economy in the world, even higher than China's. That's a new projection being made right now. So in that being the case, with things like inflation starting to go up again, oil prices having gone up and still not showing any sign of reducing, and I'm talking now of India, of tax collections having improved but being lower than expected, the stock market continuously going up, the savings rate having gone up, but a lot of that saving not getting diverted to productive assets. Where do you think are the big growth drivers? I've kind of plotted a few odd things, and that's not the entire picture. These are some of the nodes which are good and some not so good, because some inflation, of course, is necessary for growth. Now, clearly, we have many of these things falling in place, some large middle class, large growing, aspirational India, as our ability to safely vaccinate the country improves. What do you think will happen in the next year, 2, 3, to turn this into India's decade?
Mm-hmm. You know, we talked about inflation earlier when Chief Economic Advisor was talking. I believe one thing that is starting to happen in India is technology. Is even welfare schemes are becoming efficient. Money is reaching to people. So I think economy is becoming more efficient and will continue to become more efficient in the future. My sincere hope is, if as and I see the economy is also being well managed, I don't see the kind of inflation that we saw earlier coming back. I don't see that, because I see economy is starting to become efficient. The scale, we are starting to get a scale in every sector. The infrastructure is starting to support logistics efficiency. Power, you're starting to get 100% power. Hopefully, power rates are starting to stabilize. I think we are reaching a stage where we will not see the kind of inflation that we have seen in the past. So if we can be a low interest rate economy, and we have to take some risk there. If your savings rate are low, obviously slowly the risk appetite will increase, because who wants 3.5% return on savings? If they see that by putting in mutual fund or people who manage your money, that getting a better return, then slowly some part of your wealth you will start putting in, hopefully not in gold, but in sectors which will drive productivity and growth. So I would say I am hopeful about inflation, and I am hopeful that our interest rate remains low as it is right now, or hopefully goes down. And I think that will drive the entrepreneurship much more than what it is doing today.
You're right. Let me reaffirm the two or three points you made. Clearly, innovation is on the rise in India.
Yeah.
Consumption is on the rise in India. Aspiration is already high and is growing in India. Indians' ability to take risk has always been there historically, and not just in India. Indians globally have done exceedingly well, whether as managers or entrepreneurs, and we can see that across the globe in Europe, in North America, in many other parts of the world. In Africa, Indians have driven many enterprises. So I think at this moment, the combined aspiration of the government giving these clarion calls of building India, the industry wanting to stand up and be counted, the ecosystem becoming favorable. The old days of what we used to complain about India, in fact, the whole world used to point out, saying India's problems are lack of infrastructure, too much corruption, excessive red tape. Now, each of these actually has turned into an opportunity. Infrastructure is the largest investment opportunity India has seen in a long time. The improvement in processes, reduction of scrapping of lots of old laws and rules, governance and management of the economy, the civil society itself is getting better. We've not gone as far as we need to, but we're on the right direction, clearly. So I think we need some acceleration on that front. That's why we keep talking of the next phase of reforms or an ongoing reform, and I'm glad that the government used this opportunity of the massive lockdown and the slowdown in the economy to continue to push the reform. And I think as industry is coming out of this lull of this difficult period, as individuals who had suffered, especially the migrant labor, etc., many of them have come back or are on their way back. Clearly, we see that this momentum is not going to be a short-term momentum of a month or a quarter. This clearly looks like a decade where India will grow and continue to grow. Because you're also talking now of larger investments, of putting up a fab facility, a fabless facility to build the capabilities in what currently is India's largest import, the electronic hardware, which is also the single largest manufacturing industry in the world. On the other end of the spectrum, as you and I have discussed this many times, there are opportunities for hundreds of millions of jobs to be created in the rural areas if we can also accelerate the rural economy other than the agri-based and modernize the agri-based economy. So the opportunities at this time are pretty much across the board. Would you agree, or would you think there are still some risky hotspots that we have?
No, I agree, Sunil. There are opportunities in every sector, and there are large players starting to emerge in each of these sectors. Even in the because I see investment going up. I see from the government side they are starting to respect private sector. Uh, Chief Economic Advisor spoke about privatization as a word being used instead of disinvestment. And
that is the first time in a long time. You're right.
Yeah. So Prime Minister called to say that private sectors bring efficiency. I think they do, and so I'm actually all the things that you highlighted. Of course, there will be challenges, there will be issues. We face some roadblocks, but I'm only seeing more productivity gains than ever before. What we have seen. I'll give you an example. In one of our consumer businesses, for 5 years, we have not increased the price at the end level effectively, I would say. And it's purely because of productivity gains, partly largely driven by technology, digitalization, and also by efficiency that we could gain from logistics. A lot of things. What we used to see price increases the way earlier has stabilized. So it gives me hope from my own businesses. What I see, it gives me huge hope.
So, yeah. So the
No, go ahead.
question I think we need to ask ourselves now is, to achieve this aspiration, other than the things we spoke about, what are we actually doing about the pieces that are missing or still need significant course correction? And there are a few, as you know, there are more than a few. Fortunately, because the mood is right, the momentum is right, growth is coming back, despite the new wave of the pandemic hitting us, people are still able to talk about the future, which was not the case. If you, as you're aware, 6 or 8 months ago, there was complete despondence when the first set of lockdowns started. There was both uncertainty and just sheer confusion. I think today we are starting to look at the future with hope. But what are the couple of things you think that we need to fix or watch out for as we get onto this high growth path?
See, one of the things that we have to observe very carefully is our India-China relationship. And I'm saying this in a context of everything. Obviously, we are an interdependent economy. Uh, but sometimes we have to realize that China is a state-dominated economy. State plays a very important part of the role in the private sector and sometimes is subsidized. And we in India sometimes get blamed if we are not able to compete with them. Yes, in some sectors they are definitely much ahead of us. And I would say technology and digital, they are far ahead of us. But there are sectors where we are able to compete if played on a fair level basis. I think government has put some thought on that, and I can see that they are trying to balance, because the way I see it, we can compete with everyone. It's the China factor that we have found difficulty in. Especially our small to medium sector got affected hugely. Now that stress is coming back, that how do we grow our own manufacturing in India at every level? So I think we are an interdependent. We can't say that we will only produce in India and not depend on China. There will always be, but some level of balance must come in, and I think we are starting to see that. I don't know what your views on that is.
No, absolutely, you're right. The globalization is here to stay. Even if countries want to put up walls, both of tariffs or physical walls, this is here to stay. Data cannot be stopped. So the reality is, at this moment, we are already on the road to that continuous, and it's not just high growth. We need to also sustain it, because for a country like ours, there is also a need. We have 250 million people today living in abject poverty. So to address that need and to turn that a very challenge into an advantage, at the same time grow the top end of India, I think there are two ends of focus that's required. One is those industries with a high multiplier, real estate, automotive, healthcare, textiles, which employ lots and lots of people. On the other end is the top end of technology related and technology businesses. And third is picking those which have the possibility of becoming global leaders, and we do have amongst these and a few others where we can play a role, and to further those, and both as a nation and as industry, we need to sit down together and work on this, as all successful high growth economies have done. Where that's the other thing I think which is a necessary ingredient, is a sense of faith and trust between government, industry, and civil society. There we do need some rebuilding. And I think that will be the last building block that is required for us to put together to get us to not just the decade of growth, but to a wonderful growth opportunity to put India back to what they used to call India in the old days, Sone Ki Chidiya. My good wishes to Jana Bank for the celebration. Thank you to Ajay and the entire team for the wonderful job you guys are doing. And Hari, thank you very much for this conversation.
Thank you, Sunil, and congratulations to the bank.
Sulil and Hari, that is the thunderous applause you would have got if everybody were physically present. I first must congratulate your friendship. You know, when I see both of you talking, it just comes as like two seasoned, successful, mature individuals having a good conversation. It was looking so pleasant. So thank you so much. Few points I must mention. You did say that license Raj going away is opening up entrepreneurship. Accepting failures was a terrific point. I really think that just doesn't go for business, but probably goes to every human being in their careers, in their lives. And Hari did mention about, banks should have different risk models now. The old risk models probably are good for that decade with that generation or with that aspiration. And clearly, Sunil, your whole thoughts on how we should pace up high employment generation industries, look at top end technology in a different way and make sure that we realize who we are and go back to the Sone Ki Chadiya. I think really wonderful. I'm very sorry. I mean, I genuinely, at the next moment possible, would give us more time because there's so much to learn from both of you. But on behalf of Jana Bank and everybody who's listening in, thank you so much. It's been really wonderful. Thank you so much again.
Thank you, Ajay.
Thank you, and good wishes and good luck.
Thank you. Okay, folks, I think we had two really awesome sessions, both by the CEA and the Sunil Muljal and Hari Bharti duo. Given that we have run beyond our time limits, we will take away the next session, which was about Jana, and we will put it in the end. And if time does permit, we will do that. But what I would like to do is bring absolutely on time the session, which I think will be a session all of us will find probably interesting, which is Sky the Limit? Led by people who don't need introduction, but I will, being the host. Started dabbling in stock.
We can't hear you.
Yeah, we can't hear him at all. Can you hear him, Rakesh?
I can't hear him.
Yeah, I can't hear him.
Okay, give me a minute. I will repeat. Right. And his most valuable holding is a watch and jewelry maker, Titan. Are doing Jugalbandi with him, and of course, equally popular, famous, Akash Prakash. Akash Prakash is the chief executive of Amansa Capital PT Limited. Extensive experience of 25 years in the India securities market. Akash had a stellar career in investing before he started off Amansa in 2006. He was the director of investment with Thamasek Holdings, which is the investment vehicle of Government of Singapore. Akash spent 6 years as portfolio manager for GIC, which is again a Government of Singapore arm. And finally, Akash also has worked for 6 years in Morgan Stanley. He's an MBA from IIM and a Bachelor of Commerce from Bombay University. Our very dear Mr. Tamal Bandopadhyay will continue to moderate the session and make it a bit more interesting and spicy with all the questions you all have sent. But with that, let me welcome both Rakesh and Akash to the session. Tamal, please.
Hello and welcome. And yeah, thanks, Ajay. Fireside Ajay has been pushed to the last session to make it on time. We'll be on time. So next 40 minutes, is sky the limit for Indian markets? I have fairly simple questions for Big Bull and Akash Prakash. Here are the rules. Certain questions are both for you, both will answer, and certain are individual questions. Let me first question is for both. We'll start with Mr. Junjunwala. Is this how important is government for the market? I would not name, but there are certain stocks which for the past 3 decades have been doing extremely well, irrespective of which government is in power. Sir,
I
Rakesh
think
sir.
governments may not be important for specific. One thing, Mr. Bhatta, I would like to say that we don't believe in your rule. The only rule is there are no rules. Please. And second thing I would like to say is that government is important for the general economic growth. If India doesn't have growth, Titan is not going to be able to sell jewelry. Titan is not being able to sell watches. Asian Paint will not be able to sell paint. So governments may not be important for specific companies, but I think they're extremely, extremely important for the general economic growth on which the prosperity of every company in this country depends. And if they do not create the ease of doing business, we could never have exported the amount of software that we're exporting. So we cannot underplay the role of government for the prosperity of every company and for every Indian.
Yeah, Akash, this session is more outside in, inside out, because you are sitting in Singapore watching India and Mr. Junjunwala is in Mumbai. So tell us your take, role of the government for the market.
No, I totally agree with what Rakesh has said on this. I think that, ultimately when you're buying into India, you're making a bet on the next 5, 10 years of growth, if not longer. And obviously, if you don't have confidence that the government can create the conditions to deliver high growth, then that has an impact on what are your expectations for earnings for the broad market and the expectations of how companies scale up. I think Rakesh is 100% right that it may not affect an individual company specifically so much, but even there you could argue most companies do get infected. But definitely, if you're taking a view as how much you want to invest into India, which is what a global investor has to do in decide an allocation, the conference, their conference on the government is critical. I totally agree with Rakesh.
Thanks.
And I would like to add that,
sure.
we realize that it is we who create the government. It is our society. It's our elected government. I think what every Indian does, is extremely important. Not only from government point of view, but from us as a society.
Yeah, that's a very, very critical input. Now, Akash, I was told somebody said that at Sindham College you used to play cricket. So this is not a googly, but tell me, I follow your fortnightly column in a national business daily. Till recently, you were not as bullish as on India. You are, I would call it even bearish. But certainly for the past few months, I am reading your columns. Of course, you are hedging your bets, but you are extremely bullish, competing with Rakesh Bhai on bullishness on India. So what is this behind it? The budget?
No, it's not just the budget. The budget is an important part of it. Because I think the budget should. I think really is to change. I mean, a lot of the points the chief economic advisor made in this event itself. I think there's been a radical sea change in the attitude of the government towards business, towards trying to. I think economic growth is back to being the number one agenda of the government. I think they're being very smart in terms of how they're approaching industrial policy. I think they are recognizing that there is no trade-off between growth and inequality, and I think they've recognized that that they need to get out of the way. And I think the point that the CEA made, which is that you need to create the environment that the private sector regains confidence, and ultimately investment is an act of confidence. Private sector investment. If you're going to put a plant on the ground, you need to have confidence. So I think the government's talking, the prime minister talking about respecting the private sector, the lack. I think a little bit of of some of the persecution that some of the complex that some of the private sector companies have started feeling, animosity, etc. I think all that is toned down. The prime minister said a very positive tone, saying we want to respect the private sector, we want to encourage growth. So in that will encourage private sector investment. And the second piece of the equation, which is productivity, I think all the stuff we talked about, privatization, asset monetization, the insolvency and bankruptcy codes, is all going to massively encourage productivity. So I think there is a very significant change in approach of the government towards capital. We're moving back to being more right of center from being almost left of center in the last 5 or 6 years. We're looking back being pro-business, pro-capitalism, let the economy grow, let people make money. and that will trickle down. And and if the country does well, that money will be reinvested back into welfare and improving the lot of the entire economy. So I think it's a sea change in government, and I think I'm starting to see the impact on private sector entrepreneurs, the thinking, the approach, the confidence, and that's why I've become a lot more positive.
Okay, it's a very, very apt sum up. Now, next question is to India's Warren Buffett. Is this, in the past also we had historic budgets. 1991, economic liberalization, 1997, the so-called deemed budget, and now we have the boldest ever, which spoke about privatization, quote unquote, which the chief economic advisor said now. Okay, bhai, tell us, I mean, do you see anything can go wrong even after this budget? Because again, CEA was talking about the implementation from your experience.
Yeah, I'd like to make 2, 3 points. The first point is it's not only about the budget. I think there are various things like the IBC, the RERA, the GST, which has been done earlier in the last 5, 7 years. Now, what the budget tells us is that the government, with its brutal majority in parliament, is absolutely sure of doing second generation reforms, and they are determined. So that time has come. I think India is now going to face the best part of the second generation of reforms this country needed. Second thing is, in 91, when we did the reform, it took time for society to absorb those reforms and for those reforms to benefit the society. The real growth came 9 to 10 years later. But I think these reforms we are well prepared for, and they are going to have an immediate effect on the economy of this country. That's what makes me very bullish. And also the fact that the cost of capital is so low worldwide. And despite all the inflationary fears, I feel that in Japan, they kept printing money. Nobody has printed money the way Japan has printed. But there is no just inflation. The inflation just does not come. So in aging societies in the Western world and Japan, we are not going to have inflation. And that is going to lead to low cost of capital, and that's going to lead to a flood of capital into this country. So you have reform, you have capital, you have inherent skills. People forget that we were 40% of world GDP in the 17th century. I think we may not go to 40%, and I don't know why you have read Kickstarting India's Decade. I think more apt word would be Kickstarting India's Century. Because once change takes place and the skills and the abilities of the Indian people are released, it's a tsunami. Don't forget one thing. I spoke to a group of NRIs. I told them, sir, what you have achieved, your genes are Indian. Don't forget that. What America gave you was a platform. What I envisage is that India is going to give entrepreneurship and Indian skills a platform. And the energy of that, the energy that is going to be released and the growth that is going to be released by that platform and the inherent skills and the inherent democracy is unimaginable. And I'll give you an example of the experience in life that when I see a company, I'll give an example of Escort. It was a written off company. I made some of the biggest money of my life in Escorts. Why? Because I recognize there are inherent assets in Escorts, right? And now, with the right attitude, those assets are going to be better used. The change has exceeded all and everybody's expectations. And when the threshold of change, there are always difficulties, right? But when things fall together, the growth that can become, I think, is beyond our imagination. It's my prediction by 2025-26, we are going to have 10% growth, which is at least going to continue for 2 decades.
Yeah, I will come to those.
Prediction in 25 years, we will exceed China's GDP. I reserve the right to do it.
Yeah, so budget is not a one-off event. It's a climax of a series of events that the government steps.
Bandyopadhyay is the first time in the history of India that in the same budget session, our investment in Star Insurance, the CEO was saying that let's discuss these new rules and the new FDI policy in insurance. I said, sir, it will take 6 months to be notified. So let's be patient. But sir, the insurance bill has been passed in this session of Parliament. It will be law in 15 days. That is the speed at which government is acting in its intent. despite all opposition.
So this is not India's decade. This is India's
It will
specific.
not give you a message, Mr. Bandapalai. It gives me a message that government means business this time.
Absolutely. So this is not India's decade. This is India's century. Now, Akash, yeah, Akash, you tell us how critical is US for this markets, Indian markets? Because is it the US bond yield and that's more important, or is the Indian fundamentals? When you bank on or invest in Indian markets, what do you look at? It's US decides that, or it's India? What's happening in India?
No, I think, I mean, from a short-term tactical point of view, the US does matter in the sense that, what happens, emerging market flows and stuff like that. But in the point Rakesh is making, which I totally agree with, by the way, I mean, I think he's more bullish than I am, and I hope he's right, because frankly, if he's right, it's great for all of us. And I think, and I can see where he's coming from, because, he has the type of companies he talks to, and I think the insight he has is unique. So, I think long term, both of us are on the same page, which is that we've gone through a period of 7 or 8, or almost I would say a decade now, where India has significantly under-delivered its promise and its potential, right? For various reasons. I'm not blaming one government or the other government, politics, for various reasons. It's, and partly we've gone through a systematic cleanup of the Indian system now. Look at the bankruptcy code. Look at GST. We've taken. I think we've taken a lot of pain in the economy the last 5 or 6 years to clean up the system and fundamentally, I think, improve the long-term fundamentals, right? So I think the point Rakesh is making is that now the time to gain, to reap the benefits of all these changes which have happened is coming now, number one. And number two, and I'm repeating my point, I think there is genuinely a change of thinking at the government level, undoubtedly. I mean, I've not seen, I mean, for the same prime minister who used to be worried about Sood Boot Ki Sarkar is now coming on the floor of parliament and saying privatization is good, is saying private sector is good, letting people create wealth is good. This is the same government which was on, at least on paper from an external perspective, was quite rattled by the Sood Boot Ki Sarkar comment made by somebody, 5 or 6 years ago. The government now, I think, is very unabashedly saying, no, if we want India to progress, the private, like the chief economic advisor said, it has to be led by private sector investment. It has to be ethical wealth creation, which I think is a clear message. So I think there is a real chance that a lot of growth will be unleashed in India. Productivity will massively improve. I think that's the long-term bet. Tactically, yes, if the US goes through a problem short-term, if bond yields go to 5%, 3%, 4%, will emerging markets create a problem? Yes, short-term, that could be a tactical problem. But frankly, if Rakesh, and to a certain extent, if I'm right, any short-term tactical correction like that is actually a buying opportunity for India. So frankly, if we are Indian investors, and if we are long-term investors, which we are, it's not a bad thing. It'll give us the chance to buy.
Okay, so it's an India story. There is no debate on that. Rakesh bhai, one of your recent interviews with the TV channel, part of it went viral all over the place, where you're talking about there are people talking about liquidity driven rally. It's not liquidity driven. It is the fundamentals. Can you tell us a little more on that? You have already explained a lot of things, but little more on that, because people loved it. I think millions of lakhs of people, it was that WhatsApp was running around. Your talk on your annoyance with people who are talking about liquidity driven, and you are saying it is fundamentals.
Let me tell you one thing about liquidity. That markets go up because there are more buyers of shares than shares available, right? Or there are paucity of sellers. So you cannot have, it was the first time that after the second and third quarter results of the current financial year, the earnings in India was upgraded. For the last 5 years, after every quarter, the results were downgrade. And see, US interest rates will come and go. That's not the only cause of the rise in markets. Most people don't believe in this rise. They are influenced by this media, this COVID, and this is going to happen, and businesses are going to fail. But you ask Mr. Kaval, his NPs have not gone up abnormally. So, according to me, the realities are far different from the perceptions. And maybe, the index is today 14,800. It may have been 14,000 if the US liquidity was not there. It has contributed to some extent to the rise. But the basic increase in rise is the earning expectations, and the earnings are much greater than the expectations. And to the human, and this is how typically a bull market starts. That there is an event, right? That event is a very bearish event, and market goes down abruptly and goes up abruptly, and everybody is so shocked by the bearish event that the mind cannot adjust to the rise. That is what all this behavioral science. I know people write 1,000 pages books. This is the behavioral science I have learned.
Okay.
Right?
Akash,
And as long as you don't accept the market is a treacherous animal. It's going to keep picking.
absolutely. I mean,
Yes, liquidity has contributed to the rise, but I think it has contributed to 10% of the rise. And I think the more interest rates go up in America, the more will be the interest in India. Because you're not going to have the kind of growth that and the potentiality that you are going to have in India. And forget US liquidity, sir. Mr. Bandyopadhyay, don't forget, we are living in a country where you save $750 billion a year. We have 5% of household wealth as equity. America has 31%. They have the highest level of profits to GDP ever. We have the lowest level of profits to GDP. That is a contrast. So don't think we are an American tool. And our markets are going up because America is going up.
okay.
There are
Akash, sorry.
fundamental
Yeah.
reasons why markets are going up. And are going
Yeah, Akash, you spoke about the change in government. Everything has changed. The body language, the Sood But Ka Sarkar, it was so embarrassed for being called like this. Now it actually is becoming a Sood But Ka Sarkar. India now embrace capitalism. Now tell us, sitting in Singapore, how do you see the governance structure in Indian companies? Is it also changing in sync with times?
Yeah, I think governance structure has improved significantly in India. For two or three reasons. One is that we've gone through the last, since the ILFS NBFC crisis, there's been a severe crunch on the balance sheets of corporate India, right? The balance sheet recession. In most industries, the weaker companies, the weaker balance sheets have got decimated totally. Either they've been driven out of business or have been driven into irrelevance. And there are many promoters and business houses of repute which are no longer relevant from a market perspective and are barely relevant from an economic perspective. So there has been a massive cleanup among corporate India. Whether they like it or not, it's reality, number one. Number two, look at the dispersion in the market itself, right? In the same sector, look at the dispersion in multiples which investors are assigning to companies which have good governance, which are those which have mediocre governance. It's massive divergence. So the market really is paying up for good governance, and it's, I think, very obvious to any entrepreneur that if you're in the market cap game, which ultimately most people are in the market cap game and wealth game, that if you're not straightforward and don't have good governance, the market is not going to pay you for that. Number two. Number three, and this is something I think Rakesh has spoken a lot about also, look at the big industrial houses in India, Tatas, Mahindras, to a certain extent Mr. Birla as well. They're all talking capital allocation. They're all talking good governance. I mean, look at Chandra. I know Rakesh is a big fan of the Tata Group and Mr. Chandra, rightly so. But look at even, he came at the Kota conference. I heard him talk there in a group meeting, talking all the right things in terms of capital allocation, cash flow, ROIC. Look at Anish in Mahindra Group. He's talking all day about capital allocation and return on capital. Even Mr. Birla, I heard him at the Kota conference, he's talking about capital allocation, cash flow. And this is percolating down all the way from top to bottom. So there's again a radical change in corporate India, in my opinion, also among the larger companies at least, because of the huge crunch on balance sheets, because of the difficulty of raising raising capital given the balance sheet constraints that the system has gone through, and given the disproportionate upside the market is giving you if you have good governance and good capital allocation. I think the message is very clear to corporate India, and I feel there's a huge relevance. And also, I may add one final point on this. I think the rules with SEBI, the institutional, with the giving them the majority of minority for special resolutions, the activist, the people are now being required to vote, the coming of shareholder advisory services. I think the whole ecosystem is coming by which minority investors now have a say, they're relevant, and they drive valuation. I think the corporate governance in India has improved dramatically in my opinion.
Amal, I would like to add here, in the evening earlier, when people used to have a drink and discuss spicy matters, everybody's discussion was that what is the Swiss balance account of this entrepreneur? Today the discussion is what is the market cap of this entrepreneur? And the market is saying that you get governance and you get valuation by the razor of the sword. If you don't have good governance, market's not going to give. That is a change. And also the
Excellent. So,
earlier point I would like to point out to you,
yeah.
maybe there have been some mistakes, but it was very right to persecute corporate India for their misdeeds.
Okay.
Right?
Yeah.
I know thousands of entrepreneurs who live in bloody $20 million houses and still don't pay the banks.
Agreed.
My friend Mr. Damani has created a 2 lakh crore market cap company. Nobody persecutes him. Nobody is persecuting the house of Tata. Nobody is persecuting the house of Mahindra. So those who are, my father used to say, be afraid of your deeds. Don't be afraid of anything else. So those who have done the right deeds need not be afraid of anything.
Thanks,
So
Rakesh.
instead of pointing out to the government that they're persecuting people, if you don't follow the law and the government is not right, you deserve to be persecuted. That is
Agreed.
that is a society. Just
Fair
because you're
enough.
rich and powerful doesn't mean all your acts have to be looked through.
Fair enough.
And,
So,
and if I may add just one point on this, I think whatever people may say about this, I think the reality that in this government, even the biggest entrepreneurs have been taken to task. So I think you got to give the credit to the government for that they've allowed it. I think it's very rare if you see the history of Indian politics that so many large, powerful entrepreneurs would have been taken to task at what has happened in the last 3 to 4 years.
a question to both of you. Mr. Junjunwala, you tell us first. Now, we are talking about high growth. CEA spoke about of course, definitely high growth in 2022 because of base effect, but even beyond that, not 5%, 7% growth he's talking about. And you also are talking about apprehensive about higher inflation. And this combination actually theoretically is good for the equity market, isn't that, Mr. Junjunwala?
No, reasonable inflation is good for the equity markets. I mean, 4 to 6% inflation is very healthy for the economy also. But inflation beyond 5-6%, I think, is not good at all.
Okay.
You cannot. And I see no reason if we have productivity gains, that inflation should go up. Inflation, if we can control inflation, not only by interest rates or by lower commodity price, but also by productivity. And the crux to India's future growth is going to be productivity and good policy.
So given a choice, if I ask you, Mr. Junjunwala, what would be the interest rate? I mean, how should RBI approach the interest rate at this point of time as the growth picks up? What do you think we should be slow in raising the rates? What do you say?
I mean, see, I'm no economist. So what I feel is that up to September, even at the cost of some inflation, we should not allow interest rates to go up. Beyond that, we should follow the required monetary policy, whatever is needed.
Okay. Akash, on both the questions.
Yeah, no, I think I would agree with Rakesh in the sense that, a little bit of inflation is good. I mean, if you look at globally, right? I mean, you have like a U-shaped curve for multiples linked to inflation. Too low inflation is bad for multiples. Too high inflation is bad for multiples. So I think, in fact, even in the US, I think it's I think it's 2 to 3%, which is the ideal inflation number for multiples in the US. I think India probably inflation is somewhere 4-5% is 4 to 6%, which is what the RBI target is, probably fine. So I think and also the reality obviously is that higher, as long as inflation doesn't go berserk, but it's like 5-6% or 4-5%, it leads to higher nominal GDP growth, and obviously the biggest predictor of corporate earnings growth ultimately is nominal GDP. So if you have higher nominal GDP, like you're going to have outstanding earnings growth this coming financial year because you're going to have nominal GDP growth of 17-18%. So you will have you'll have 30-40% earnings growth because of that. So as long as inflation doesn't go out of control, a certain level is fine. I agree with Rakesh totally. It's good for the banks. It's good for corporate earnings. There's money illusion to a certain extent. And second question on interest rates. Yeah, I mean I agree with Rakesh that I think the economy is just starting to gain momentum. The confidence is trying to come back. You don't want to short circuit that now with suddenly starting to raise rates and creating doubt and confusion in entrepreneurs' mind. I mean, whenever we talk to industrialists, all those guys who are announcing big capex plans, they say the biggest reason they're doing it now is because cost of capital has come down so dramatically. Like Mr. Birla also mentioned in the Kota conference, I've green lighted $2.5 billion of investment across the group because interest rates are low, and I can lock in 5-year, 10-year capital at 6-7% type of rate interest rates. If that number starts rising, then you could have people again pulling back on investment and stuff like that. So let the momentum start, and then you can you need to get the moment balls to keep. You have to regain momentum basically.
Thanks, Akash. This is a 7
I would
round.
like to point out, Kamal, is that see I think we should recast the contention, the content of the various items in our inflation index, because they are made for a time when food was a very big part of every Indian's consumption, and now food as a part of the consumption is coming down as we are gaining prosperity, and food prices are very very volatile, especially vegetables and fruits. So I think we need to recast the inflation indices
Absolutely.
to more reflect India's present consumption trends. And we need to recast them every 2-3 years because if we have fast prosperity, the typical consumption palette of every Indian will change.
No, absolutely, Mr. Junjunwala. We in fact discussed this with CA, how food is 50% weightage within the CA.
And very violent, very fluctuates. It fluctuates like anything.
Yes. Now, Akash, we had 7 rounds, and on every occasion you agree with Rakesh. So I have a sneaky feeling that you discussed among both of you that
No, we are friends.
Whatever your friends, but
Mr. Bandapatra, you will not find two independent thinkers and people of conviction than me and Akash.
Okay.
If you see our portfolio, nothing is common mostly.
Okay, let me see. Let me see on this question. It's a general question to both of you, and I'll ask Akash first because then if Rakesh says, Akash will say I agree with Rakesh. So Akash first, he said, do you think that the way we approach taxation is an issue for the investors? Because the long-term capital gain, then short-term capital gain, then STP, and then dividend tax at the hands of the corporations, and now dividends for the receivers. We keep on changing and experimenting. So is it an issue as an investors? What's your take on this? First you say, then I will, then Mr. Junjunwala.
I mean, I would have preferred that they didn't bring back long-term capital gains tax. Even they could have extended the definition to 3 years instead of 1 year if they wanted, because we are long-term investors, or they should open up a bigger gap between long-term and short-term. But so yeah, I think I would ideally prefer go back to zero long-term capital gains tax. I think it makes our life far simpler. As a fund, it's very complicated to keep accruing for short-term, long-term capital gain tax and stuff like that. I think also I think you were in a situation where you had a very attractive environment for investors where you didn't have tax on dividends, you didn't have capital gains tax. Maybe I mean that would be ideal, but maybe given the socio-economic construct of India, given our per capita GDP, given the need of resources, that may not be sustainable. So I have no problem with short-term capital gains tax and probably dividend tax. You could have a concessional rate, maybe not link it to income. But personally, I would have preferred them not bringing back long-term capital gains. I think that does also, if I may ask also a point, that does put India at a disadvantage from an institutional investor perspective. We have only institutional investors as our clients, endowments, family offices, foundations. They don't pay tax in any other jurisdiction in the world. So this is a sore point for them, that we are tax free in the US. We don't pay, why are we paying tax here? So it's a little bit of a pain point for them.
Over to you, sir. Rakesh.
There are 2 points of question. I think the changes have climaxed. I don't think there are going to be many changes in the taxation laws as applicable to the investments. I think in the near future. And second thing is, sir, I'm not an international investor. I'm not allowed to, and I don't want to. So I'm used to paying taxes, unlike Akash's clients. So I find the present regime quite reasonable. Of course, I would be happy if I, didn't have to pay any tax. But as he said, seeing the socio-economic condition, I think the tax levels on the stock market are quite reasonable.
So first time I hear that on the 8th round, there is some kind of difference between your approach and your thinking. Now, Rakesh sir, tell me, say if you look at the Nifty 50, and I go back 10 years, 12 years back, 2008, 9 and all, many of the companies, I would not like to name them, just vanished. Now, when you look at Nifty 50 now today, do you have similar apprehensions that 5 years, 10 years down the line, many of them won't be there?
I don't know whether it will be owned or not be there, but in the worldwide, in all indexes, companies are changed. I think the Dow until now had only one company, which was there for 100 years, which was GE Electric. Even that is out of the Dow now. So change, if you look at the Sensex in 1990 and look at the Sensex today, you will be shocked. There are not more than 2-3 companies who have lasted for 30 years in the Sensex. And I don't know of any Nifty or Sensex company which has vanished. I mean, they're not performing well, that is different from being vanished. They're not penny companies. So those, they are not doing well, but that is the nature of the animal. And change of the constituents of the index is a worldwide phenomenon, so nothing new. And now as time is progressing, one thing that is changing in investment is the short life cycle of companies and the volatility in performance. That's becoming more apparent with the day.
And Tamal, if I may add to that also that question, I think one of the other reasons why we are also increasingly getting more and more optimistic on India longer term also is the huge what's going on, which Rakesh is also very active in the whole what is happening in the startup ecosystem in India. I think in the next 12 to 24 months, you're going to see at least 30 to 35 unicorns, not just technology, but other companies. Like I think Rakesh is invested in Star Health, that also I think will come for listing, and various high quality companies will come for listing in the next 1 to 2 years. And I think, in my opinion, this is where the next bunch of really genuine world class companies for India are going to come. For India is finally, you're going to see this ecosystem from venture capital, PE funded, first generation entrepreneurs, high quality governance. They're not going to come from, in old Indian industrial house listing another company. I mean, some of that may happen, but the next bunch of real world class Indian companies are going to come through the way it happens in the US. They'll be funded, they'll be professionals, they'll be first generation entrepreneurs, world class governance, business models, and and the way they're set up and the way that we do business. And I think this is a huge positive for the Indian market to broaden the markets, increase depth and diversity. And India has always been a stock pickers market, it's become even more a stock pickers market because so many new world-class companies will come.
And I would like to add here, Kamal, for me as an Indian and for us as a society, we should feel proud that this is all first generation wealth. In a so-called unequal society, it is the new aspirants who are creating wealth. Absolutely. So you see in India, that is not this is India is this, India is crony capitalism, India is this. Sir, first generation entrepreneurs who came from nowhere are creating the wealth. That is what Akash is saying. That makes me proud as an Indian and should make every Indian society proud.
Yeah, no, he's 100% right. If you look at, we've started looking at this space a little bit now. Look at the companies here; they're all IIT engineers, MBAs, all studied in India, all worked in India, and none of them have wealth. They all first generation.
And Mr. Kamal Bandyopadhyay, I'm happy to inform you that my return on my unlisted portfolio is greater than my return on my listed portfolio. There also I have long investments of 10, 12 years.
Great to hear that. Yeah, but tell us, both of you, a bit short probably, that IPO frenzy. Now every day there are so many companies are going for listing, and then the number of subscription. And do you see this sort of that so-called irrational exuberance? Is this catching on, or is it the new normal? Akash and
it was catching on, but it is getting corrected. Two of them have already listed, I think, beyond the issue price. I think Anup got some Razak company and Kalyan Jewellers. So one or two accidents, more like this, and this, I agree there was irrational exuberance. The exuberance will correct it. The markets are in one way, they have self-correcting mechanisms.
Yeah. No, I agree. I think the valuation expectations in the IPO market were gone overboard. Companies were asking for all types of valuations, 40 times, 50 times financial year 23 earnings and stuff like that.
100 times.
Yeah, okay, whatever time. So I think that as you need already 2-3 of the issues have not done well. Another 2-3 will not do well. Automatically, all the valuation expectation will come back to more normalized levels. So I think I'm not too worried about that. And it's not that big. It's not like the entire effort, energy, everything is in that area. It's not big enough to think that the whole market is going to corrupt the market or something like that. I don't think so.
Okay, one question to both of you, and Mr. Jhunjhunwala, you are first. But a couple of years back, we started talking about that Indians, the local investors, they are driving the market. But now, the past 1 year, you look at it, it's all over the place. FII, record flow, and if you see the equity flow into the mutual fund has been negative for months. So, is it a structural change for the market, sir? Rakesh, first you.
if Indians don't want to invest, what can we do? And I think the negative returns, negative flows of mutual funds is over. I think March will be a positive month. And I think, I have invested all my wealth into equity from 1985. I don't know why Indians don't want to invest, right? And there is no option, they will come. पहले क्या है बाजार when market goes up they don't participate, then uncle comes, then auntie comes, then nephew comes, then father comes, everybody will come. बढ़ता हुआ बाजार और जलती हुई सिगरेट छोड़ना बहुत मुश्किल है. बंदोबस्त I don't know whether you're a smoker or not, but क्या बोलते हैं कि बढ़ता हुआ बाजार और जलती हुई सिगरेट छोड़ना बहुत मुश्किल है सर. सब आएंगे, पिताजी भी आएंगे, नानाजी भी आएंगे, दादाजी भी आएंगे, बस थोड़ा समय और
Akash.
अंग्रेज आते ही जाएंगे.
Okay, Akash.
Yeah, no, I'll address the global point. I mean, I think the domestic point Rakesh has addressed. Globally, I do believe that there's still a healthy level of skepticism, which is good on India. There are enough people who still believe that India can't grow more than 5%, which is a good thing, because these are the people you want who will eventually convert if we are right and India does accelerate and people will come off the bench and come into India. The reality is this, in my view, the world is fun. If you look at what's happening in the West, the world is fun. Forget this next 12, 18 months, but otherwise, the world is short of growth. There is with excess savings, there's a lack of growth opportunities. If Rakesh and me are right, that India has turned a corner and is now accelerating through policy reform, through demographics, through various things we all talked about, they will come because you have world-class companies. You will have hopefully a strong economic growth. You're starting at a point of profit share of GDP at a 30-year low, and you have good companies. So money will come. And the reality, yeah, exactly. And the reality also, if you look at the emerging market index, there are only 5 markets which matter. There's China, there's South Korea, there's Taiwan, there's India, and there's Brazil. That's it. That is 80% of the MSCI index, 85% of the MSCI index. So frankly, the rest of
इतना नहीं बोलेंगे, इसको बोलेगा कि 20,000 और 25 और 30,000 के निफ्टी में भी लोग चाहिए ना, अभी आ जाएंगे तो फिर वहां कौन आएगा? 20,000, 20,000, 30,000 nifty we need buyers. No, if all of them come now, who will come at those prices?
He's saying that, not me, but yes.
I'll come to that later. We have this, but yeah, as you rightly said, Mr. Junjunwala, that Nana, Nani, everybody will come. Actually, they have already started coming. If you see during the COVID time, the number of individual demat accounts have gone up. They're not exactly Robin Hood.
It's like rain in Bombay in April. Monsoon is in June, sir. This is like rain in April.
So tell us, is it they are not exactly Robin Hood investors, but they are entering the market directly. So Mr. Junjunwala, is it again showing a structural change? We will see exactly what you are saying, that Nana, Nani, uncle, auntie, the Dada, everybody will be in the market.
But that is the nature that is the animal of the markets. पहले किसको लेना नहीं है, फिर किसको बेचना नहीं है. In 2002, nobody wanted to buy. In 2008, nobody wanted to sell. And this is history. No technology is going to change unless human behaviors change. That is the process. Recognize it. Don't comment on it. Take advantage of it.
So Akash, this retailization of equity market, is this now the new normal?
I'm not sure retailization per se. I mean, there will
not
be
in terms of fund flow, but in terms of numbers. The number of demat accounts which got opened in the past 1 year or 14 months probably had not been done for the past 5 years.
You look at the proportion of adult population in India. You look at the proportion of adult population in India and see the number of demat accounts compared to the proportion of adult population in this country. It's not more than 2%.
Akash?
Yeah, no, and also I think given our demographics and given the percentage of young population and given the onset of digital technology, it is to be expected that more retail participation will happen. I mean, it may come through mutual fund, may come directly. I mean, frankly, I don't have enough of a grip to understand. I think retail participation will increase. I don't have enough of a grip of touch to feel that is it excess right now. I don't think it's excess because the numbers are not that berserk or anything like that. But it's only to be expected. But I think the trend towards financial savings in India rising is inevitable. That is, you can't. That's not going to change. Given where we are, given demographics, given per capita GDP, given the mix of savings, where the savings are today in physical versus financial, within financial, in bank deposits. So I think that's a long-term trend. Now, if how much we retail mutual fund, that frankly I don't have enough grip on. But I think the trend towards financialization of savings is a long-term, very, very secular long-term trend.
Thanks. We could actually we could go for next 3 hours, but I'm not very sure whether you have lunch. So I'll stick to 3 more questions. Little micro, but no stocks, because this is not for stock pickers. This is for those who are investors in the market in the larger sense of the term. So Rakesh sir,
I don't advise anybody to forward stocks except my wife.
So Rakesh sir, tell me, which are the sectors for you? Which are the sectors to bet on, and which are the sectors to avoid?
See, I
right now.
a very long rule, right? So every every dish in the buffet is going to have its time. Right? So everything is going to do well, but I think at the moment the cyclicals, the infrastructure, the public sector banks, the most battered stocks, as I keep repeated saying, are the one where the opportunities lie.
Anything to avoid? Any sector to avoid?
In
Sorry?
investment, avoid companies who don't have good corporate governance for long-term gain.
Akash, which sectors to bet on, which sector to avoid?
I mean, the sector is not something we get into. I mean, because we are try to be much more stock specific. So I think, frankly, the opportunities across sectors. I think the question is to find where there's change. Either companies doing something, gaining market share, benefiting from formalizing. I mean, there are various long-term trends in India which we've talked about, which I think companies will benefit from. So I mean, there's no specific sector we're looking at or not looking at or anything like that. It's much more company specific, frankly.
Okay. One question. This is the last but one question. Again, Rakesh sir, with you starting. When you pick a stock, right now I'm getting to stock, but not which stock. When you pick a stock, which are the 3 important things that you look for? Is it governance? Is it management? Is it business model? What comes first? What's second? What third? And anything else?
First comes opportunity. I want to be in a company where the opportunity, I mean the runway for growth, the external market. I mean, if I give an example of Titan, how large is the jewelry market in India? How is it going, and how much percent of it is organized? So that gives me the kind of growth Tanishq can have. So first opportunity, then people, and then governance. Then I would add technology or the ability to change through circumstances. And I think what is very important now is also frugality. I mean, I like frugal companies. DMart and Indigo are example of very frugal companies. Mr. Damani is very careful of every 1 rupee that he will spend for his company. And also, what is very important is patience. See, growth is a process. You cannot sidestep it. And out of 100 who try to sidestep it, 95 fail. Right? So growth is a process. You got to be patient. And if the finishing line is not tomorrow, then I've learned from the hare and the tortoise always wins. So I think these are the broad principles on which I would evaluate a company.
Absolutely. Akash?
No, very similar. I mean, I think India is a market where
Every time you say agreeing with me, say something different. He doesn't like to agree with me.
But this way, क्या different बात करेगा? This is the same thing. I mean, this is like, you could ask something more controversial. This is like very standard. All of us are going to say the same similar things. Yeah, which is we all look at similar things. We may come a different conclusion of what to buy, but the approach is not very different.
No, the thing with Rakesh added, which we don't discuss. We all talk about governance, or is it the frugality, and he's picked up 2 companies. The cost consciousness, and also the innovations, the flexibility. So, anything else we are missing out from companies?
No, I think also we look at, I mean, which Rakesh is also talking about, which is also, I think, the depth and quality of management. I mean, the governance is one part of it, obviously, which is very critical. But second is also I think everyone, which is a cliche, everyone is going through huge disruption. So every company obviously doesn't have the depth of management, the quality of to handle that type of disruption. So governance is one part of management. Second part is flexibility and ability to handle the disruption which every sector is going through.
Basically is the ability to change.
Yes,
the ability to recognize change. And that's what the modern world is about.
Yeah, yeah.
Yeah, absolutely. I think, I mean, everybody listening, hundreds of audience, and you have real skin in the game. So coming from you, they know what to look for. Now, the final question before I allow you to have your lunch, we have already exceeded the time. And let me
Don't
see
worry,
this
I'm
whether
gonna
you.
try no lunch.
Okay, sir. Thank you. Now, let me see this whether you choose to disagree. This is this is today is March end 2021. 2 years down the line, around the same time, March end, depending on the date, your availability, you again been invited by Ajay Kanwal of Jana Bank to discuss again on the Indian market. At that time, what will be the level of Sensex or Nifty, whatever it is? Rakesh, you will come later. You will have the last word. Because you are where Sensex is and Nifty is. Akash is sitting in Singapore and watching from there. So I'll hear Akash first and then you.
So you're asking me how much, where do I expect the Nifty to be 2 years from now?
2 years down the line, you and Rakesh at the same panel for Jana's 5th anniversary. By the time Jana is listed and in the market. So where do you see the level of indices?
I think market will be up 50%.
So Sensex 75,000.
Whatever the, I don't know what the Sensex is now, but whatever the number is, I don't track, but up 50% from.
Oh yeah, 75,000.
Yeah, Rakesh, you.
Yeah,
and anything else? And anything else I have not asked you. I should have asked you.
I can predict the direction. I can't predict the depth. But as a rule, I see for the next 4-5 decades, I see the Nifty doubling every 4 to 5 years.
From now on.
From now. And only thing I would like to add is that we Indians have no faith in ourselves. We have no recognition of our abilities and our own potentialities. Now I feel like writing an article, believe in India, my fellow Indians, and profit from the growth that is going to come. What I want to add is, as Indians, as a society, let's have faith and optimism in our own abilities. मरा मुंह लेके जाएगा तो मरे की खबर लाएगा. Right? Why don't we have optimism and faith in ourselves that we can do it? And we will do it. I may not live to see it. I may not live to see it, Mr. Bandyopadhyay, but I can tell you it's my conviction, and I reserve the right to be wrong, that India will equal China in 25 years in per capita income. The prosperity that is going to come in this country, nobody is recognizing it. At least my visualization of India differs from 99.9%.
We can do it. We will do it. I'm not going to summarize. Ajay, let him do it. But anything I have not asked you, anything you want to add, both AP and Rakesh?
Be more optimistic is the only thing I want to tell you.
AP?
No. I think Rakesh summarized it well. Yeah. So what can I add over this?
Again, he's agreeing with me. Again, he's agreeing with me, Bandyopadhyay.
Rakesh, I have a question. Once. So Rakesh, you have wonderful lessons, and I know you're a very deep thinker, you're very mature. If I asked you lessons on life and not lessons on stock market, what would be your deep, thoughtful messages to all the viewers today?
See, the most important thing in life, according to me, are three. One is the ability to change. Examine all your deeds with not what society says, but with your conscience. Set your standards in life. And don't forget that Shakespeare said very truly that life is a stage. You have come here to play a role. The role will end. So examine closely into your conscience that what are you doing? Is it good for society? Is it good for to others? Have empathy. Have empathy with others, and always remember that success is temporary and transient. It is here लोग सूली पे चढ़ा रहे हैं गिराने के लिए. Right? And life I've learned is not about regrets, it's about learnings. I have made a lot of mistakes in life. Sometimes when I reflect, I say, no, I have to learn and take care of your health. I have now 3 objects in life. I now have 3 objects in life. One is to take care of my health, to improve as a person. I have good qualities, I have bad, I have undesirable qualities. I should, as a human, recognize them, accept them, and try and improve upon them and give. I pray to God, don't give me wealth, give me the power to give. Because at 61, I feel what am I going to do in life? What am I going to leave? And the biggest thing, the biggest aim and ambition of my life is that the day I die, and death is inevitable, it's the only truth of life. How many people will feel a good man is gone? And I don't want to change myself in any way so that people say I'm a good man. I want to live life by my standards, do what I enjoy what I do, and be good and faithful to everybody. I hope God gives me the power to achieve what I want. For He is the only. We get wealth not because we are smart. Get wealth because He has chosen us. We get wealth, success, happiness by the grace of God and the blessing of elders. And I've come to a new concept of wealth. I thought about it a lot. Who's a wealthy man? A wealthy man is a person who thinks he has more than he needs, whether he has 1 lakh or he has 1,000 crore. And I have come across people who don't have 1% of what I have, but they are financially very happy. And life is learning. I'm learning every day. I don't know, I can go on and on and on, but that's what I'm learning. I'm still learning. And this COVID has really changed me as a person. It has made me introspect more. It has made me learn more. It has matured me. And what I've learned is that when you learn and you accept, the pace of your change and acceptance just goes up. So it is, and that's what I would say. What will you say?
Rakesh, very important because, while you keep talking of how to make money and where the index will be, I think after people make money, they will start thinking like you. I mean, hearing you today, I'm sure people on their way to make money will start thinking like you're thinking. And I
No,
think
no,
that
but
helps society a lot.
this is not, I don't bargain with God. And you didn't have a child, they said, go and say you'll donate 11 lakhs to Tirupati Bhagwan and you will have a child. I said, what's God? I don't bargain with God and God doesn't bargain with anybody. Otherwise, पैसे वाले को हर चीज मिल जाती है, even non-financial.
Thank you, Rakesh. Akash, we would also like to hear your thoughts. How would you think as a human being? Because you're very successful, you've done so many things right, you run a very successful fund. What are your thoughts? Or have you seen, is Akash frozen?
Yeah, I think so. I think I'm frozen.
Okay, but we can still hear you very well.
Okay, okay. So no, I mean, difficult to add anything more to what Rakesh has said, but I'm just saying that I think it's similar in the sense that COVID has also, taught all of us, I think, including me, a lot of lessons in terms of what's important, not important. And I think it's exactly what he's saying, which is that I think we've all reached a stage of life where we need to give back a lot more. The one thing which strikes me because most of our investors are U.S. based institutions, I said family offices, foundations, endowments. I just see the sheer wealth in that country, in the U.S., and the amount of wealth people have recycled back into education institutions, into charities, into doing things. And I just wish that India, which is our country, that we see similar levels of wealth for our country, and that I really hope that we all have the grace and the wisdom to give back more to society, and and just try to improve everyone's improve everyone's life around us, because I think we've been, as Rakesh said, we've all been blessed. Not any great brilliance on, at least on my part. It's all just really, frankly, luck, right place, right time, whatever. So I think as you get older, you start recognizing that it's not you, it's luck and chance, and you have an obligation and a duty and a responsibility to give back as much as you possibly can.
I would like to add one thing, Ajay, here, that good deeds to society is not only charity. Charity is a large part of it. It's also the means, the methods, the standards you set. See, if I break all the laws of this country and involved in wholesale corruption, and I want to earn money by bribing people, right? And then I do charity, that charity means nothing. What's very important is also the standards you set in every act of yours. And your approach. I mean, you have to set a standard of integrity, and the contribution cannot be only by charity. It's also by other acts.
So true. I think our applause is due to both of you, and of course to you, Tamal. Really, uh, really, thank you so much, Rakesh, Akash, Tamal, because I think it's very important. if you think about what the small finance bank does, it really works very hard on the underserved, underbanked side of society.
They're
I think,
advertising. It's not advertising.
No, but
And
if I may ask, if I may,
don't
no, no,
guess.
if I may, no, no,
And
if I may,
distinguish. Both have white hair, both are of same height.
no, but if I may say, if I may say,
Akash, please go ahead.
no, no, if I may say that, yeah, as you know, as people may or may not know, we are investors in Jana Small Finance Bank. So I think one of the things also beyond your leadership, Ajay, and Tamal's, guidance also, I think was we were genuinely very impressed with what Jana has been trying to do in terms of, spreading inclusion and really reaching.
Okay.
I've already invested.
Jana is very lucky. All NPS are born investors, so there's no problem.
All the check is in the mail, and thank you so much. On that, we thank both Rakesh and Akash and Tamal. Tamal, please, thank you.
What's next?
Thank you.
What's next?
Next is my thank you speech, and then we will have lunch in our respective homes.
I thought you were sending lunch to us. Yeah.
Okay, I'm just calling up Swiggy right now. Thank you, Rakesh. Thank you so much.
Thank you, guys. Thank you.
Thank you, Tamal. Thank you. Yeah, I am. Hearing Rakesh, Akash, and Tamal together, it was impossible to stop. We will, of course, cut one session because I'm very conscious that all of us have been here since about 11:30. We will try and do more about Jana and probably our engagement in some other forum. But first, I would like to say the best and the most beautiful things in the world cannot be seen or even touched, but they must be felt from the heart. Thank you is one such prayer amongst them, where you really have to say it from the heart and feel it in the heart. So on behalf of the entire Jana Bank, our employees, our board, and our customers, I really want to thank everybody here, especially the dignitaries who made this event such a memorable and successful event. If you think about where we began with our chief guest, Dr. Subramanian, I think he put the tripod very clearly. He spoke about growth, he spoke about ethical, and he spoke about implementation and execution. I think he really charged up everybody of what India can be, with a brief mention of how we have been 33% of the world GDP for 17 and a half centuries. If you heard what both our successful businessmen, Mr. Munjal and Mr. Hari Bharatiya said, which is about how they're themselves transitioning. And Mr. Munjal made a great point. You don't have to be a young man to be an entrepreneur. You can be even 60 plus. And that's so true, that with your wisdom, with your experience, we can really change India in a significant way. And how all of us have to evolve. Like Mr. Bharatiya said, even bankers have to evolve their risk models to suit the new tomorrow. But the platform has been built with no more license raj, with digitization, with technology. People are getting access to things that they never got before. And then, of course, from both our dear Big Bull, I would say dear because we love him for not only that he's been so successful, but that he can speak his mind and express himself so clearly, and he's got such a confident and solid belief about him, what he is doing and where India will be, which is Rakesh himself. And of course, Akash, one of the most thoughtful and insightful person that one can have in the markets. And what they're really saying is, there is a moment where all the ducks are aligned. We have got the government in the right spot. We've got emerging markets where we are one of the bigger players. There is global money which will flow in. There is Indian entrepreneurship being released. There is literally everything which is working. And people can't predict where everything works together, where the country will go. I'm sure you had a good time. We've received a lot of questions from you. We tried to cover many of them. But really, thank you so much. I wish you all the best. And from everybody in the Jana family, I can assure you that we'll keep doing our best as a bank. Thank you so much.